Hello, hello. We are going to go to try and get the technology together here, see if the tech will work. We are testing 1, 2, 3. This is the Crypto Kingdom, and let's see if we can get everything going. Let's try and pull up the charts, and it looks like we are live. That's a good thing. See if I can get the music working. Get that music working. Hope everybody is doing great this morning. Having a good morning. We're getting through the week, aren't we? Let's see if we can get that music going. We'll pull up the charts. We have some stuff to discuss about Harmony 1. Let's see. Let's get that music going. All right. Now, welcome back to the Crypto Kingdom. And let's see if our music wants to engage. There we go. Got the music going. We need some music for the morning. Welcome back to the channel. Now, whew, what a day, guys! What a day. We're looking at yesterday. We did some calculations. Up in and around 50%. Okay, 50% was the. Let's see. Let me turn this music down. 50% was the kind of cap rate, or the actual max rate. Hold on. Let me turn this music down. There we go. Now, where are we at? It's a little bit loud. Let me turn this music down. We'll put this at level 5. You guys let me know, but that sounds a little bit loud to me. There we go. It's not bad, but a little bit overbearing. Okay, now let's take a measurement real quickly in terms of the, let's see, get into the charts. Now we're on Trading View. We're using the premium edition of Trading View for you guys that know. Let's take a look. Now we called this entry spot, let me turn that music down a little bit more. I'll turn that music down a little bit more. You guys may just like the chart and the music. Let's see. Let's go down to 5. Let's try 4. How about 4? Let's try 4. That should work. All right. Now, in terms of overall returns, you guys, I have to say, let me up this a little bit. First of all, we didn't get much sleep. I don't know if you guys were up working the charts here, but we decided to take a break last night because it was just a lot. We had a big day. 50%, okay? 50%. Okay. Now we're looking at, okay, to line this out exactly the returns that you guys, the maximized return yesterday, we're looking at, I'm going to go ahead and draw this up to the period of time. You're looking at 52%, okay? 52% was the maximum return yesterday that you guys could have achieved, okay? Out of honesty, it would not have been that great, because if you were listening to the channel, it would not have been maximized to that extent. Probably would have been in the neighborhood, if you really sold at the top, if you had projected that out, and probably maybe 2 to 5%, the top 2 to 5% capitalized on that full breadth of the channel. We had an entry in and around 13. Okay, so as we look at this, this is around, and we'll redo this exact figure to show you exactly where our entry spot was. It was in and around this upper area. So most likely the return, now I spoke with people directly that made about 30%. That was a phenomenal day. In and around this original pump on the upside that we got, 37%. That was achieved in very, very quick order. Very quick order there. The issue is that we thereafter broke out. Now, I know a lot of people liquidated, okay? They achieved their gains for the day based upon our entry point here, 35 to 50%, etc. 35% definitely reasonable within the kind of immediate short term that people were able to achieve. So phenomenal day, congratulations. We did stream last night, and I took in a small position, and I want to show you guys the position that I took, because I wanted to give Harmony 1 kind of the credit. I wanted to say, okay, good, let's just go forward with this breakout and at least trade the breakout. Now, Harmony 1, I had prefaced it, Harmony 1 does not like to be traded, okay, on a breakout. It just doesn't. It had faked out, it had faked out, it had put up a few hurdles, excuse me, a few different hurdles along the way, and we discussed that kind of in depth. What I will just bring back to everyone's attention very quickly, we did discuss heavily that the original channel on the upside looked something like this. We had received what appeared to be a breakout here. Some people got caught up in that. Okay. Now the last thing we want to do is everyone get news that there's a breakout of the channel, get involved, and then it just a huge steep cliff fall off. That's not what we want. That's not what we want. We don't want anyone trapped on the upside. Always on breakouts like this, as I had discussed last night, a light position. Okay, very light position if you're going to play this. If you're not playing from a position of strength, say in and down the lower part of the channel, or the heavy position that we got into in and around, let's see, in and around 13 cents, that's right. You'll see this first hurdle was thrown up. It turned into a fake out. Okay, they didn't get us. In terms of the, I mean, I haven't talked to any of you that were taken on this ride. If I'm incorrect about that, you guys let me know. The nature of the channel continued after this first hurdle, and really you could have said maybe this was the first hurdle. Okay, we're going down in this area. Did anyone play this? Now this was April 1st. We weren't sure exactly what was going on. That was a difficult little period. April 1st, we don't have to revisit those issues. We can revisit the fact that people made, pretty phenomenal gains in and around with the channel. They made phenomenal gains. Let's see, on the 27th, 30%, phenomenal. It looks like yesterday, fully, you guys were able to achieve 30%. I'll talk about last night's action, where we're at, where I'm at right now. I can tell you from the point of breakout, it's a wash. Right now, it's essentially a wash. So, and that's okay, playing with light money, etc. Understanding the nature of Harmony One on these breakouts. It doesn't like these breakouts. We had a potential hurdle here, a potential hurdle here, and you're just seeing the channel adjust, okay? Could have been the channel this way, okay? Look at the contact points in and around the top here, potential, somewhat of a price confluence there, into the second hurdle, okay? People could have said, well, this is a breakout. This is, let's put our channel, our price action in and around this area, and, bam, looks like we're breaking out. Everyone wants to get in. I brought up the hesitancy to get involved in this trade yesterday and last night. Just a quick fun, it's a hand of blackjack, if that, at the, if that in Vegas, in terms of, I'll go ahead and take a roll at it and get involved with some of you guys who are holding and doing some different things. It's good for me because I may not be in the same position as a lot of you. Some of you are just, diamond hands holders, and that's it. That's all you'll, no one will convince you differently. So it's nice to at least align myself with you guys when you need a Harmony One channel. So, we're trying to fill that need, and we appreciate you guys being here. Shout out to all the guys in chat. Light me up in the chats. Yeah, morning all. How are you guys doing? Good morning. Just want to say good morning to you guys. And let's see what we have on. Okay, now we came down to what I just was convinced. I was darn determined that this was going to be a breakout. Okay? It was going to be a breakout or else. Okay? And kind of why is that? Well, because that's just what we decided. Okay? I mean, at the end of the day, it just had to be a breakout. I did not want to run into another hurdle. All right? I didn't want to run into another hurdle because we had run into potentially one, and I'm talking about where the channel could have been defined, and we could have fallen into kind of a different channel here. Okay? People could have said, well, this is being defined as a channel, multiple contacts along the upper line of resistance, right? We have a lower channel being established with multiple lines of lower resistance, and then we have a major price action, right? We have a major price action defined wherein people could have been faked out. We don't want you to be faked out. And we can draw in the fibs. We can talk about investment levels in terms of what your strategy is, in terms of risk mitigation or lowering your risk, okay? Harmony One has achieved a 20x. So it doesn't require us to jump on the bullet, okay? It doesn't, when I'm saying a bullet, this price action on the way up, this price action, this, this impulse, we'll call it, it's an impulse in the price action. This impulse and price action on the way up, Harmony One doesn't require us to jump on the bullet. It more requires us to have an acquisition strategy, kind of a planned out acquisition strategy that you guys know about, that we have been discussing. That acquisition strategy is what we discussed that got you into, got a lot of people that I've spoken to, that got them into the correct price in and around here at the 12, just under the 13 cents or around the 13-cent level. That planned acquisition strategy got you, got you about a 30% return. That's good strategy. Now the breakout, I'm just going to tell you, I traded it. Now I didn't trade it heavily. I told everybody I'm not trading this heavily, but we had to push for this darn rocket. Okay, so because we had two options. Okay, we had two options, and I'll go on the record as the guy who was working for the rocket ship. Now let me show you, how much we did achieve during this area, because it doesn't look like we achieved a lot. Some of you still made money. Okay, some of you still made money trading the breakout. So congratulations to anyone who made money trading the breakout. Phenomenal job. Okay, phenomenal job. I want to make sure my music is working somewhat. Can you guys tell me in the comments, is there any music? I don't think there is any music. We need some music. Let me see if I can put some music on. Let's see. Let me see what we got on music. You guys have music on? What are you guys listening to? Anything good? Let's see. Let's see. Let's see. There we go. All right, we have some music. All right. Now, I'm interested to know, honestly, amidst the people in the comments here, the listening audience, okay, are any of you still holding from the entry price? Are any of you still holding from the position, the entry position? Okay? I would like to know who's still holding. I would like to know also who got in at the breakout, okay? Did you time this up perfectly, all right? I'd just like to know that, okay? We're going to lower the volume just a bit, see if we can continue to do some degree of, yeah. Well, we need an audio technical expert here. Where is the, yeah. There, okay, let's do 4. 4 or 5, okay. Now, we have different options here, and I want to know which group you fit into. I have put some moving averages on the chart so that we can have some different discussions about how this price structure and this pricing action may kind of operate going forward here in the near term. The key question is now, what can we expect? Okay, what can we expect in terms of retracement or continuation of the uptrend? It looks like we have broken out of the channel, certainly. Now, in terms of the overall, let's look at, hold on, there we go. Let me pull up you guys want to see this in candles. I want to be able to show it to you guys. Now look, we clearly did. We got involved on the stream in and around this area. Okay, from there, from the 16.2, I do want to bring up from the 16.2 even. It looks like people achieved, and this is consistent, right at 10%, guys. You made 10%. You guys are literally, you are the group that wants to make 10%, especially on a day trade. That's just, let me put this down at 4. Okay, should be a little bit better. Okay, so you did, from the time that we initiated launch, I'd say, the breakout, you guys put together a 10% return on your money. Okay, looking at the candles, etc. And that's when things started to kind of push in the gray zone. We knew we'd get to the gray zone, and from the time that we kind of started from the time that we initiated the stream and around this area, we were convinced it was a breakout. We came to you. You made 10% on your money. That's the maximization of this. If you see the 2 orange lines here, I've copied over kind of the limit here of what people got to. You may have made a quick 10% on your money. Now, with a small amount of money, going in and just having fun. Some of you may have gone in a little bit heavier than that, but I'm excited that it seems like it's worked out for you guys as well. If you throw that on top of the 30%, you are doing well for the day. And not sure who took the 30%, then the 10%. As we talk back through these price actions, the maximum move was about 50%. Okay, so that's a phenomenal day for Harmony One. I would have preferred to have seen, okay, more of an upside movement with a little bit of a residual on the top residual side than what we've seen right now. But it may have an upside, and we'll talk about the golden pocket. Okay, we're going to move this rocket ship and keep it on standby over here. So let's take kind of a macro look and see what has been changed. Well, what we have done, I think this is going to be the 20-day simple moving average. Let me see what we've got. Let's go ahead and, if you have a right click on a moving average indicator, you can see we're looking at the 20, the 50, and the 200 moving averages here, okay? So it looks like we have broken above the 20. All right, we still have yet to reach the 50-day moving average. Sometimes these are crucial in terms of pricing. They haven't proven to be crucial yet, and I'll just say yet. We have not come to that 50-day moving average. Now, a quick look at everything is essentially green this morning. If you look to the right, the market is green. Okay, so is Harmony One. So congratulations that we have broken out of this channel. I did want to go through the maximization here to show you this level. Now I'll move these over. Okay, now this was the breakout. The smaller arrow was the breakout after we went live. Okay, we achieved about a 10% gain. Just small, guys, it's not even day trading. It's kind of intraday trading. Okay, you're not setting up something to go in and out. It's it's kind of intraday trading, just extremely kind of impulsive, quick kind of moves based upon a reconfirmation of the breakout of the channel. You guys, just good job. You're a very sophisticated group in terms of your abilities in the market. I'll just tell you that you guys are good. Now, I do know you guys now, though, because on smaller trades, I see you guys. If we're going in light, I'll see you guys go in and make 10%. That's not a problem. That's okay. It's just you're letting me know kind of what your tolerance level is, and I don't blame you. That's right in line with kind of the ideal position to be in. Is if you're trading a breakout, if you're in the zones. Let's go back to the Fibonacci zones. Let's go. We had put at these retracement levels. I wanted you to know that we should look at the retracement, kind of the facets of the retracement. Now these are retracement zones. Let's see. Let's go through. Sorry, these are extension zones, okay, that are, let's say, pertinent to the retracement. Now these are extensions that are pertinent to the retracements. Now, why could this be important? Well, now these are calculated events. These are calculated amounts. I want to just educate people on what they mean, okay, and how they could apply, or they could kind of inform us what has gone on with the price. Now, this isn't the candle. The candle will show us on up through the full price action, which we were live during this time. It was nice. We got up into the gray area. And that's just, guys, it's just a percentage, okay? All these are percentages, okay? From, 78, if we want to talk golden pocket, we'll get into that in just a moment, to the 50%, the 50% line, etc. These are just probability intervals, essentially, is what they are. The retracements turn into your extensions. Okay, you don't need to know all of this. I will go over the details in a micro and macro regard. The bottom line is people made great money yesterday. We had a good day for Harmony. Congratulations, another good day. You want to know whether or not that will continue? You want to know kind of where we're at, and if it's kind of the exit time. People may want to know, not fully the exit time. We're done with Harmony. It's nice to see, hey, Harmony to $1. I'd like to see that. Yeah, good morning. Shout out to Richard. Yeah, we are relentless here. We keep you guys on top of your trades. We don't want you guys in a bad position. Bot at 12. There we go. Hey, Dennis. Shout out to you, Dennis. Congratulations, you got in at 12. Okay, Dennis is one of the individuals. He's in at 12.1. Now, phenomenal job, Dennis. You've done well. You're up 50%. During, I'll just say intraday, you're up 50%. you're probably up around 30% now. As you look at these issues, I mean, let me see. You want me to lower that volume? Yeah, absolutely. I'll lower the music volume. No problem. You guys let me know on the tech what you guys need done. Let me see. Let me get back to this. Can you hear the music? Can you guys hear the music? Let me know right now in the comments. Can you guys hear the music? Is that bothering you? Hit me up in the comments. Is the music bothering you? I can't even hear the music on this side. Let's see. Hit me up in the comments if the music's too loud or you can hear it. Hey, shout out Mark. What's going on, brother? We all love making money, I'll tell you that. We're hitting these targets very well. Very well. Around 12 yesterday. Congrats, O'Shea. Way to go. No music, okay? No one can hear it. Someone's telling me to turn it down. Let's see. The Cine. Oh, I know what. We need to turn on repeat. How about that? There we go. We need a repeat function on our music. We need a repeat function on our gains too, don't we? That's why the channel's here. All right? All right, let's see if that works. We'll turn that at 5 and see if we got a good music level at 5. All right. Let's see. All right. Let's see. Yeah, about 5 is okay. I think 4 is our sweet spot on the music. We're gonna try 4. Y'all remind me next time. 4 is our sweet spot on the music. We need a repeat function on the music, okay? We need a repeat function on our gains, and that's what our goal is here. We got in lightly, okay? Yesterday on this breakout. And we had determined this breakout literally had broken through and reconfirmed, okay? We received a reconfirmation of the breakout, okay? If we extend this line, let's look, okay? You guys let me know if that music is okay. I think it's fine. I'm listening to the stream, and it sounds like the music is fine, okay? So in terms of developing a strategy, the strategy in here is essentially, 10%, beautiful. You guys let me know. That's beautiful, okay? Now we got up into the gray area around 17.5, 17.8. Phenomenal. I'll say round 2 or phase 2 of the day. I know a lot of people who made 30% in and around from 7 a.m., let's say 5 a.m. I kicked off at about 5 a.m. yesterday, okay, to about 7 a.m. People in and out at about 30%. Just phenomenal work. And, that is, okay, a credit to the channel. It's a credit to you guys because you guys have been listening intently. You have been going through all of the detailed videos. I've been cutting a lot of just straight cut videos with a lot of the strategies involved. You knew the entry target price. You knew that. You took advantage of that. You made 30% on your money. A lot of you capitalized out, okay? You may have left in a residual portion otherwise. We did go live here. A lot of you made another 10%. Okay, so on top of the 30, some of you went in probably at a lighter level, okay? Heavier, we discussed heavier in and around this major area of support, okay? And that was, I'll redraw our Fibonacci so you can see exactly, but you guys who've been with the channel, you know that was our exact target buy-in, and boy, did you guys go in up to the tune. We pushed it up. The overall market sentiment and price action, which we hit a key indicator, so it wasn't just us, the guys in the exchange houses, etc., they knew that was a key price level. So it wasn't just us, it was the collective computational market that went after and gobbled up this price action in and around 13 and sub 13, which is huge. Bam, to the upside. So 30%, then we had a breakout, and I had waited till the breakout. We did achieve after that about a 10% last night. So guys, we're on the books with literally 30 to, I say 40% for a lot of you. Phenomenal job for those of you who had the patience and the discipline to make the first 30%. If you held off from the breakout, I am not mad at you at all. I think worst case scenario about how you would have been even. Not many of you. Well, let's talk about strategy. On breakouts, we're kind of going against, I don't want to say against the grain. We do have We have several pricing elements on Harmony One to look at in terms of behavior. We have 1, 2, 3, 4, 5, 6, almost 7, and potentially 8, 9, etc. Some smaller pricing actions in here. 1, 2, 3, 4, 5, or 6 major price actions. Out of those 5 or 6, we had one pricing event which was considerable enough to make us think we could go towards something that would be indicative of getting a larger push up on the outside of this channel, on the outside of this downward retracement channel, which had been formed in order to essentially achieve some results and some gains for you guys. We wanted to do that while minimizing your risk exposure, minimizing your risk exposure. Let's see, someone wants too loud. Okay, well, we're gonna minimize the music so you guys don't have to worry about that. We'll get it working at some point in the future. So it's nice to have some background music. I may just turn that on here for me to listen to. How about that? You guys turn your own music on. You guys do that. I will turn this very low, and I will just put this on in my own little studio action here. So you guys turn your own music on. How about that? That way everyone likes their music. That's a good idea. I think everybody can appreciate that. You guys feel free to turn on your own music. Now that would be nice, wouldn't it? If we could stream out a channel and you guys were able to choose your own music to go along with the stream. Now that seems like it's the year 2021. That would be nice. You have that option in terms of choosing your own trades for sure. So, and remember, all of this information for educational purposes only. I have a prolific background in finance. Period. I won't go through all the details, but that is the truth. And a good background in finance. I've handled some very, very big deals. Harmony One is a big deal. Harmony One's a billion plus market concern, irrespective. I'm seeing a fight now. Music is chill. Some people like the music, some people don't like the music. You guys deal with the music. I've got it on, in the studio here, so you guys just pay attention to your own music and light up the speakers if you need to. I want to go through a few different things now. Okay, we're in an event now. We have gone through the retracements here, and let's say the retracement action. This retracement, we've gone through some of the previous retracements in other videos. This retracement action, I would like to say it's concluded, and that we're in a different paradigm that we're coming forth with. We see this price action in and around the center here. For those of you who are on a larger platform, like a computer, you'll be able to see this pricing action, specifically. Now, these are extensions, Fibonacci extensions, which are very calculated, We see a trajectory to the upside, a challenge, essentially at the top of the channel, this trading channel, this downward sloping trading channel. We see a thrust through, we see a breakout, we see a reconfirmation of support. If we go into the exactitudes, we're essentially trading up these channels, stair steps up these channels. Now, we did break down into the previous channel. It would be nice to use this as support and continue to go on the trajectory up. It would not be unheard of, it would not be unheard of, Now, let's see. So you're probably 20 years older than you. That's cool. What's up, Sid Duncan? Steel. That's good. How old, I wonder, do you guys, do you want to be when you're still trading and being able to pinpoint accuracy? If you can do it now, hey, we'll listen to your channel. Mark, I think that's funny. Or Sid, whoever it is, talking about age, that's phenomenal. If you guys, I'll tell you guys, you want some words of wisdom. The words of wisdom that you'll get in the market, you learn, and this is why it's always better to deal with someone who's had more experience in the market, Because in the market, you learn when you lose money. And, you just don't know certain things. So one of my goals here is to try and bring to you Okay, is the music still loud? Because I'm not getting that at all. I'm not. You're on 3 in terms of music. I mean, I don't even see that it's on a 2 or a 1. So if you're messing around in the comments about the music, I don't know. I just don't even. Let me see if let me plug in audio. Yeah, it is. It's at a 2. I'll go down to 1. We'll just here. Let's see what we got. It is loud. I don't know why it's loud, but yeah, I agree with you guys. It is too loud. Good job. I appreciate that. That's fine. We may need to find some different music too. Yeah. There's some crazy, just so you guys know, exploring the catalog here. I'm not going to pull out some of this stuff, but look at the different moods. You guys don't want me to like get all out there. They have race karting music. They have amped, chill, popped, good vibes, and footwork. So, we don't need to go through all of that. I'll just tell you that's not good trading music. So we'll work on the fundamentals right now. Now, again, the way that you will learn, yeah, no problem, G. What's up, Steven? Listen, listen as you will learn, okay? You will learn lessons in the market by losing money, particularly as you learn to refine your trading strategy. You'll learn lessons by losing money. The goal is to learn your lesson, okay? With everything that's presented to you, learn your lesson. Trust the mathematics involved. As I say, trust the mathematics. This here is a Fibonacci extension. Okay, these are calculative mathematics that deal with the different levels of, let's say, of an upward trajectory. Okay, of a rebound after a retracement. Okay, an upward price action impulse after a retracement. Okay, we're looking at the upper bound. To what area will we achieve a price action for you to try and set your pricing targets, your targets to take profit. I know a lot of you are interested on taking profits around 10%. So I'm not upset at all that last night we streamed. A lot of you jumped in. I know for a fact a lot of you jumped in and you took your profits. Okay, I know you took profits in between this area, and the chart just tells me that, guys. I'm not mad at you. You took profits in between this area and this area. Okay, you got your 10%. Okay, and the chart doesn't reflect fully on the candles. We were up in this area. The rocket ship was going up and around this area at around 10%, and she ran out of steam. She dropped back down because you guys took your profits. So you got in, you took your profits, you made 10% on top of the 30% that you had already made. So some of you did very well yesterday. Some of you did extremely well yesterday. 30% in the morning, another 10% at night. Not many financial concerns performed that well. Okay, so those of you who day traded kind of intra-day, kind of lit the candle at both ends in the day and night there, you made good money. We can't do that every day. Okay, now we try to find different instruments that this can occur, on a frequent basis. Again, it's that song on repeat, your favorite song on repeat. That needs to be your gains. If you're losing money, okay, it can be for a variety of reasons, okay? But you need to learn the lessons which are being presented to you so that you don't lose money. One of the best books, people ask me, how do you learn about day trading, or how do you learn about technical analysis? I talk about fundamentals, I talk about pricing charts a lot. Intra-market technical analysis, okay? John J. Murphy is one of the key guys that you can learn from. This is inter-market technical analysis. I would pay attention to John J. Murphy, okay, for those of you who want to learn. And I'm talking, you're going to be studying. Okay, this will talk about the technical analysis of the futures market. This was the book that I took with me everywhere in high school. All right, period. This is what I studied in high school. So if you guys are in and around a younger age, this is the New York Institute of Finance. This is the kind of the holy grail in terms of technical analysis of the futures market. It will give your mind the right exposure, the proper exposure to consider the market on both sides of the equation as you deal with the market and you deal with price action on the upside and price action on the downside, dealing with futures And the concept involved in futures will allow you to think dynamically and positively. You need to conquer and be able to think positively about moves to the upside and moves to the downside. If you cannot think positively about moves to the downside, then you are going to be limited in terms of your overall stance in the market. We don't want you to be limited in terms of your overall stance or approach to the market. If you can only see the upside, you're only seeing half of the story. Your gains are realized, okay, or they're achievable. They're made achievable with downwards price activity, not only when you're trading options, not only when you're in a short position. In addition, I don't know if you guys are involved in shorts. Not sure that you're involved in shorts or longs. If you're into puts or calls, or you can sell or you can buy puts or calls. It requires cash, guys. It requires cash, heavy money. I'm going to redo some of the features that you're looking at right now. I want to go through some fib levels. I want to talk about the golden pocket now that we have essentially told you, straightforward, and the price action has told you. It looks like we have broken out. Where do we go from here? And this is kind of what I wanted to discuss. Now these, let's leave these over here because these will be a good reminder of, I'm just going to say, essentially, guys, some of the advanced traders, and you say, well, very few. Guys, it may be the top. It's kind of like making an A+ in class. Some of you may have made an A+, all right? Some of you may have made that A+ yesterday, okay? Probably very few, maybe the most skilled traders in the group. Let's see, 50, 56, 55, 56. Some of you may have done that. One person who made that probably, is consistent with that is probably the market maker. He doesn't have to worry about his returns. It's good for him. Looks like he did what he wanted to with the price action. Now let's get the 20-day moving average. We have collapsed through that. It showed a lot of resistance around that, okay? It decided to push through. The big question, can we get from, okay, and I'll just bring this up so you can see this clearly, from the 20-day to the 50-day, okay? Now, let's get into drawing a Fibonacci here. Now, these are ordered sequences of probabilities, okay? Ordered sequences of probabilities. Let's get into a fib retracement. We're going to get into the retracements. We just went through a massive retracement. We are still in a retracement period, okay? That is not necessarily what people want to hear. That is just a fact, all right? So let's look at this retracement level. Let's bring this down a touch. Now, depending on the time frame, we'll want to adjust this just ever so slightly, but let's just have it begin in and around here, okay? Now, you want to know, why am I starting it there? Why am I starting the trend here? To draw a Fibonacci, okay? You need to go into your tools section. Now, I have the premium version of TradingView on this platform activated now so that we can see this. There are other advanced trading platforms you can get and invest money into. It's not necessary. If you have someone with access to it, they can go through the details. All the more power. Like me, all the more power to the system. Now, I want to bring to your attention, we started at the beginning of the trend. Now, based upon just experience, I'm going to say everything kind of to the left of this line right here. If you can see the previous peaks here, I'm going to define that more or less within a different trend element for the pricing structure of Harmony 1, okay? Now that is why I have placed the Fibonacci in and around this area, all right? Now, you guys know, let's see, we can go to different time frames, etc. This is, it wants to not, I don't have the magnet on. You guys know, if you're dealing with certain structures on TradingView, you can turn on the magnet. That will, it'll bring a snap to function. It's not always kind of a snap to grid or snap to price. It's not always perfect, so it's kind of a mess to deal with sometimes. Now, let's get into, and these are a little bit, as we zoom in, again, we need to get the scalpel out. Let's, is it a little bit lower? It probably is. I want to go back to my other one. I probably can. Let's see if it will allow me to just bring up the one that we had from last night, etc. I don't have to redo the, I don't have to redo any of the timing frequencies. Let's get through all of these. If it will allow me, it's going to stick us back here. Well, okay. Let's restart here, or at least on the same timing interval that we want to be on. Let's go fib retracement. Let's get into, okay, we're going to have to know where this fib retracement starts. I had this set up for, before we went through the returns here, I had this fib retracement set up, as you guys know, for what, like a week. I'm going to have to dig back through and find exactly the lines we had drawn. They're crucial. Okay, I think this is very close. Now this extension, before we got through extensions, okay, that's essentially your upward price action, okay, the extensions. I'm going to go ahead and delete these extensions for now, okay? Now this is just a complicated way of talking about probabilities and mathematics, guys. That's all this is, probabilities and mathematics. We don't need to get too over involved in them, all right? They're just levels of support and price action that gives us some discernible kind of, let's see, we're going to put the labels on the left to get them out of the way. All right, there we go. And let's move this little guy right here over. There we go. And we're going to have a little discussion about the golden pocket, all right? I want to talk to you guys about possible additional activities that are going on in the future. We have two options, okay? I want to take a macro approach here. We have just had a positive price movement. We have just experienced, people just made 30%. Some people made 10% after that. Now again, on trading the breakouts, because we had been burned, I mentioned that I went in lightly because people got faked out here, okay? Potentially, I don't think they got faked out on this one, but I know they got faked out here, okay? We actually had this pricing support, this level of pricing support in, and some of you got in and made 10%. So it's just no surprise to me if we go live, etc. I'm just going to tell you that, and I have a pricing support that's calculated. Now, it's not me that's calculating it, okay? It's the computer program, all right? It is literally TradingView. TradingView is incorporated into, I think, practically, guys, every single major exchange, every single major crypto exchange. So when you look at it and you say, well, we don't like that program's not as good. Guys, everyone's using this program. This is the crypto trading program, all right? It's a part and parcel of every major crypto exchange. So it's not really an option to use it and enjoy it or not. So it's just an option that everyone is using it, so you can take note of that and you can use it along with them or not. So you don't have to enjoy it, you don't have to approve of it, it's just what's being used, TradingView. So we have the levels of support. You guys probably made 10%. I know that you guys had a nice, good 32-hour run here, and we'll take this little red arrow and we'll bring it over here. All right, we will get rid of this. We have gotten rid of that. So the 20-day moving average, okay, has been breached. We've gone back above that. In terms of pricing, and I will remind you guys, this is not financial advice, okay? This is not financial advice. If you want financial advice, go speak with someone at Schwab or JP Morgan or Merrill Lynch. Those guys are good guys. Morgan Stanley, those guys are great guys. This is educational in nature. I want you guys to understand the pricing mechanisms and where we're headed to. Okay, where are we headed to? Now, the golden pocket, okay, these are all essentially retracement levels. These are retracement levels, okay? Different percentage retracement levels, okay? We measure from the start of the trend to the top, okay? So from the start of the trend, it started about 3 cents to the top of the trend and around, excuse me, and around the 29th of March, okay? We got to somewhere around 22 cents. Since that time, we've been in a retracement. Those are normal. They're so normal that the trading programs include within them a retracement mechanism to provide you levels of support. And I mean levels where you should think about getting involved because statistically it's going to turn around. Okay, I'm not inventing these levels. All right, I'm not coming up with, all I'm doing is applying a program that's already existing. It's essentially like turning on your Macintosh computer, literally, or turning on your Apple computer, your IBM computer, your Oracle, or your whatever kind of a system processor computer you have, period. An old DOS computer, just push the button and fire it up. As primitive as you can think, that's what's going on here. It's not me deriving and concocting some amazing price entry. This is already built into the program. This is part of what's being used on every single trading application. So there's a multitude of people across the world that are using this program. If you're not using the program, or if you're not looking at the elements of the program, you're at a deficit. Okay, you just are. Okay, and it's just so that's nice for us to be able to bring you some of the details. Not everyone knows how to operate this program. All right, but it's just like turning on a computer, guys. It's going to flow. It's going to function, and that's a good thing. We like the fact that it's going to be able to bring us a little bit of consistency. Now, what I want to bring over, we talked about yesterday, the golden pocket. Now we have a few different options here as people look at a potential next entry. And I'll just say this, from a mild position, okay, me personally, getting involved yesterday, having a little bit of fun. I think you guys probably made 10% on it. That's okay. And again, if you invested at, based upon your own decision making. Okay, if the program is guiding you, I recommend you guys download the program. Okay, get involved on TradingView.com. Download the program. Start to publish some of your opinions. Get into the inner workings. Maybe trade with a paper account if you want to trade with just, you can always do that. Trade with a mock-up account. There's nothing wrong with that. Practice before you jump on in, because this, I'll just tell you, I've been through a lot of calculus, a lot of advanced mathematics. This looks very complicated. Does everyone kind of agree? Yeah, this looks very complicated. This looks like a very complicated chart to people who aren't familiar with it. Everyone will agree with that. We have red staircase, we have green staircase, we have a lower blue staircase. All right, we have a downward channel, we have a lot of positive price activity. Okay, we have a rocket ship over here. We have all these arrows, all right? This is complicated stuff if you don't know what you're looking at. If you know what you're looking at, this is very easy, right? You all know, yeah, this is very easy, but not everyone's going to get involved in Harmony 1 and say, yeah, this is what we need. This is exactly the chart I need. Now, this is complicated stuff, guys. So those of you who are involved, congratulations. So as we look at the trading channel here, and I say, when I say the channel, as you look at the channel, it's not the YouTube channel. No, I'm talking about the trading channel. So I need to start saying the trading channel. This is a trading channel, okay? Period. All right? And I'm speaking about the channel on this downward sloping channel that's been defined by several touches on the top, okay, at the point of resistance, and on the bottom, the points of support. These provide us with a generalized trading range that has a slope, okay? A slope, a rise over run typically, or some degree of a negative slope if we're going down. Now, what we didn't do, and what I would have liked to have seen, is I would have liked to have seen us maximize out the RSI. I brought that up last night. That's why I'm not a big fan, guys. If you're trading with RSI on Harmony 1, I want to encourage you to not. Yeah, and I appreciate that, Mark. Shout out to you, brother. You guys hit the like button. Thanks so much, brother. I really appreciate that. Let's get some likes in this. Very good. Thank you, Mark. Big shout out to you and everybody else. You guys are doing a great job. Let's see what we have. All right. Thanks for smashing that like button up. And we had a good stream last night, guys. We had about 125 active at one period of time. This is the only live Harmony 1 stream, so it's nice to see some amount of action. And I'll just tell you guys, there are investments with millions of holders. Okay, I'm talking millions or tens and tens of thousands. Okay, of holders. I know of other coins with tens of thousands of holders, and the streams achieve sometimes 300 and 400. Okay, so this is what, our third or fourth stream. This is our second or third day of streaming. of Harmony One. We have some technical issues to make sure we get through. You guys choosing your own music would be nice. But for 125, hey, we'll take 125. You guys did a great job. You guys can go over to the Discord server. You can go to the Discord server if anyone has that. It's pinned in yesterday's stream. I can try and pin that here in a second so that you guys can look through that. Let's see. That's one's reloadable. Let's see. Let me see what questions you guys have. Okay, interesting. People are making recommendations, holding 25%. That's good in BTC. That's good. That's good. You guys would enjoy talking in the Discord. And I always say, everyone here, we're just in it for the education. Okay. If you're in it for the hardcore gains and the financial advice, go talk to a financial advisor, because that's what he does all day long, and he'll make you sign disclosures. I'll tell you that one big difference that you're getting to with a financial advisor. Okay, people want to know, well, you're qualified or you're not qualified. Well, a financial advisor is going to have you sign off on disclosures, acknowledgement of risk, before you give him a check for $2 to $5 million or $2 to $5,000 or $200 to $500. He's going to have you sign off on acknowledgments of risk. Okay, that's just one of the things he has in his toolkit to let you guys know that yes, he's a trained financial advisor, and you're going to know before you put your money anywhere that you literally are locked into a risky situation. You could lose the farm. All right, to put it in a good context, they're very good at not just investing your money, because a lot of people online, you say they could be my financial advisor. They're not walking you through the required federal, state, and local laws pertaining to your risk and the fact you could lose everything. I mean, if you guys have signed on to an account, the nature of those risk waivers, it's severe, guys. You're operating at your own risk. The farm, we could take the farm. Okay, so that's what they're also trained in, not just the technicals, because a lot of what we say is, or a lot of what we see is, well, this is very advanced. This is the type of thing that maybe an advanced professional would be doing. They would be doing this, and they would also have you sign off on waivers to where literally it's like, you understand we could take the farm. And it's like, well, I don't want you to take the farm. Well, this is the relationship we're getting into, and legally I have to disclose that. So that's a big level of financial advice. That's one reason I'm not giving you financial advice. I'm not giving you that level of talk or consideration regarding your risk. That would be part of financial advice. And a lot of people just think, well, it's only if he's telling you to buy something. Real financial advice, guys, if I'm giving you financial advice, I'm covering the full spectrum of the positives and the negatives. If someone's giving you financial advice in a hypothetical, okay, and it's not me, you would be covering the full nature of all of the benefits and all of the risks. You're covering the full dynamic. Okay, that's something for you guys to understand. Okay, because not everyone does understand that. Well, financial advice, this sounds very profitable. This sounds like a strategy to make money. Okay, but you're not getting the other side of the coin. You're not getting the other dynamic in terms of, and this is very good talk, you're not getting the risk discussion. You're not getting the waivers and the disclosures, the market disclosures. You're not getting any of that. That's crucial in terms of financial advice. If I were to spend more time involved in that, then we would run a bigger risk of you guys taking all of this as financial advice. But you need to understand those components. Okay, you need to understand that a real financial advisor is going to go through the risk assessments with you. That's the necessary component of financial advice. So everyone says, this coin's going to go to $5. This is not financial advice. No kidding, it's not financial advice. You haven't even covered the risk components. You haven't even offered one waiver, on a risk basis, and imputed that to the client or to whomever you're dealing with. So, and a lot of us just think because it's financial, because it deals with money and investing, a solicitation for a purchase, etc. Now that qualifies as financial advice. The financial advice comes in when you're starting to manage the entire process, from the risk reward, to the let's say to the longevity portfolio management, to your overall exposure, your different markets, your insurance on the product, your et cetera, et cetera, et cetera. You've got a whole basket that you're going to offer, and some of it's awful, some of it's great, but you understand how that whole, I want to say that whole, that dynamic is put together and all your legal requirements. So we're far from that. And you guys know that. So are most other people that you listen to. They overstate that a lot. Okay, and you're going to want to get into those risk dynamics if you get into a financial relationship with anyone that I did mention. Make sure they cover those risk details. Now, what has changed for us? We want to get into what has changed for us, and I just wanted this to be kind of a quick video. We don't have to stream all morning, but I did want to get into what has changed for us, and you're going to have to make a decision, okay? And the decision is going to be based around, and I don't want to lift this up. I really don't want to lift this up. I've put this around here as kind of the top level support. We drew deeper down into that. I like that in and around the crest of the prior, and you can do that. Ugh. This is just scalpel time, guys. We're gonna look at the next entry point. You have my previous suggestions, okay? And I don't want people to pull the trigger early. This is crucial work here. It looks like that is the line, okay? Now, I'm drawing this right now. You guys may need to go back to the previous videos. But for right now, with the hourly that we're on, I want you to see the left line here to the green. It seems like that is indicative of just kind of, once we clear that, we've started the trend. Okay, we have started this trend. It's not going to make a difference if we pull back out to that. No, I think that's okay. I think that's okay. Yeah, I think that's okay. Let's make sure we maximize this. And again, if you're dealing with candlesticks, it's a little bit different. We're not right now. Okay, so deep into this gulch at 12.7 versus, 13 is really and 13 is the go-to. That's the key figure we kept pointing to is 13. You guys may have shaved a few tenths of a penny, 2 or 3 tenths of a penny off of that. I want to talk about the golden pocket real quickly. The golden pocket is going to be, okay, a retracement level. Now, that's essentially what you've retraced, what you've given up, okay, out of or off of the maximum that you have achieved. Okay, it's going to give a reposition, kind of a reposition point wherein your investment will be realized, typically based upon standard norms that we would find in a book like John J. Murphy, etc. Other financial books may present that to you. I just gave you one book to look at. You may have other books that you decide to go and get. That'd be a good thing for you guys to mention in the let's see, in the comments. What books have you guys worked on, or what books have you guys used to learn about the market? I'd like to hear that in the comments, you guys. It's a good little group. What books have you used to learn about the market? I'd like to know that. Let's see. Okay, as we're looking at the retracement, we kind of have a few different options here. Now, Harmony One can continue on its upward trajectory. I'm going to give you all of the options now because I'm not going to say it's underperforming because you've made 30% in the last day. It's a phenomenal day. Okay, it just is. Period. 30% is beautiful. We'll take that any day, particularly with a price target that we're right in line with. Bam, 30%. You guys are happy, right? Everyone's happy. Another 10% if you made 10% on it, kind of after the fact, that's fine. It just kind of that's an extra hand of blackjack before you're walking out of the. If you have a good weekend at the casino, etc., and you extra hand of blackjack before you leave. Hey, you won again. Yeah, a small little amount of money, not a big trade. Now, how do I gauge? I'm going to say, how do I gauge the investment levels? Again, not financial advice. I gauge investment levels in the red, okay? As I draw out the Fibonacci's, the red is kind of the danger zone, period. That is a zero investment from me. Anything in this top level, period, okay? Now, we can apply this to a smaller scale on this individual investment, okay? On this individual impulse. It's called, the trajectory, the price action, the positive price action that we just experienced, this 30%. We can apply it here. We may go to candles for that, okay? We may go to candles for that. But we can apply that within here if you're looking to just trade specifically out of this range. We can also, okay, if we're assuming a reversal, a full reversal of the retracement. That retracement is negative price action, which is required for the stability of the stock. It's required by the market maker. Okay, the psychology of the market imputes. It requires that we have retracements. It is the profit, okay, being exercised, the profit dynamic being exercised by the market participants. It is the phenomenon of profits and profitability that people will want to realize those gains and capture those gains and take them out of the market. That is what a retracement is effectually showing you, is the realization of those profits. It is that dynamic, that profit dynamic in play. So as we see this run up and we see a small retracement here, different levels of retracement, yes, they're calculable, highly calculable, highly predictive. This effect, this phenomenon right here, is essentially showing you the profit dynamic. Okay, it's showing you the profit dynamic in the market. That psychology of people making money and deciding to take some money. The person who is in charge of managing that dynamic is the market maker. Okay? In Discord, if you guys know in the Discord, I am the market handler. So there may be a few of those, but I'm market handler. You guys can look that up. Let me get just a sip of water here. That's just a tag phrase. Okay, that's my tag phrase. That does not mean that I am the market handler for this or anything else. In fact, they don't even use the terminology market handler. So I like it if I can handle a market. I think everyone should be able to handle the market that they're in. But that's not necessarily a term of art or a formalized definition that you're going to learn in economics or anything else. Incidentally, I think Oxford University has a great educational program as part of Get Smarter. You can look into Get Smarter, and Oxford University has a great trading program that you guys can learn the fundamentals and the details if you don't want to go through a book. I think it's a couple $1,000s, probably a fantastic investment in your future if you plan to get involved in that, or if you plan to stay involved in that, meaning your investment future. Now, I want to pull back this Fibonacci level just a bit. Morning, Kurt. How are you, brother? Jordan, you got in at 8. Good morning. Super cycle is just a straight pump. I believe it when I see it. Okay. You guys are having a good time. Good morning to everybody, Crypto Kingdom. And thanks for tuning in. Go ahead and hit the like button and get this out to some more people. We're discussing the price action after yesterday. Some people realized a 50% gain. Okay, the ones who probably entered in around the standardized Fibonacci levels, which is what these are the levels that the trading program, TradingView, it's the most popularized trading program that there is that exchanges incorporate into. If you were to build a trading app here over the next week, and you could build a trading application, okay? You can buy them out of the box. The software that's going to be put into your trading exchange application, and you can build one very easily, guys. The software that's incorporated into that trading application is going to be TradingView. All right, everyone uses it in crypto. It's just the truth. Some people will get involved in some different programs, but for the most part, it's TradingView. Binance has a nice interface. I'll just say in general, a nice interface. As you get to mobile, TradingView changes a little bit. So let's continue to look at the story. 20 times your earnings, a retracement. We're wondering if this could be the ultimate signal to go on the upside, okay, for us to begin a new trajectory, okay, after experiencing a 50% overall movement in the price yesterday to the upside, okay, after experiencing the overall move to the upside, breaking out of the channel, essentially, we are considering now the degree to which this landmark asset, this coin, which had reached about a 22 cent high, from, literally from, let's say 1 cent, okay, from 1 cent to about hovering around 3 cents, 2 cents, up to, and this is just recently that's with 23rd of February, okay, to 28th of March, okay, in and around 30 days here, guys, 20 times your money. Is that what, 10 times your money? Huh? About 10 times your money there, in and around from, last few months and around the 1st of Feb, etc. Depends on how far you go back, but since February 1st at 1 cent, February 1st at 1 cent, let's go to March, late March, you're in at 20 cents. So, count the weeks up in a short period of weeks here. That even sounds better. Huh? I like to say that rather than the word month. In a short number of weeks, in 2021, it's represented 20 times your investment. So I want to stick with the major, first of all, go in with the major, okay, investment levels. Okay, these are the major retracement levels that are already pre-calculated. I'm looking at this with TradingView, with the premium package of TradingView, okay? And I understand the levels. I want you to understand the levels. At the top, this is essentially buying high. I don't buy high. I'm gonna say I do not buy high. You may seek a financial advice. Okay. On the second green level, the light green, okay, I'm getting into, and the first level is about a 23% retracement on the overall trend, the price action, which has gotten us up to this miraculous 20x, okay? Within this second green level, as we get from a 23% retracement to a 38% retracement, I'm willing normally to throw in maybe $100, maybe $1,000, depending on what my overall, I've got 10 times the amount at least, guys, 10 times if not more, because every level that I'm going down, I'm doubling down. And the double down approach is something that's used institutionally by some of the biggest cats on the street, whether or not you're overseas with the larger exchanges to the huge equity fund management trusts, etc. The guys who are involved in Bitcoin, literally at the top levels of coin investing, they're doubling down. Okay, this is not my invented idea. This is a very well recognized principle. Okay, at different levels, you're willing to double down. Bloomberg Business literally has kind of a double down approach they've discussed with some of these top line investing houses. So that's crucial. That's very crucial. Now, so as we get into light green, willing to double down, as we get into and reach this new price element, you'll see in and around here on March 3rd, okay, you'll see the price action just wants to hit this level of in and around 15, right? People made 10% right here, very easily, very, very easily. I want to say that this may be, I think that is where we originally had it. I'll bring up the old chart to look back exactly through, but I know we hit this precisely on our previous one, and again, it may determine where we zoom out. Sorry to move that around at all, but I will go back and compare, maybe on a split screen here in a minute, but I know for a fact we targeted these, and had this drawn out before they were targeted. So you guys trust that. If you want to look back through the videos, you can confirm that. I promise that's the way it is. I guarantee you guys on the channel, guaranteed that's the truth. So with hitting this next level of blue, I normally will say if I have $100 in and around this area, I'm willing to put, or 1,000, whatever it is, 10,000 or a million. All right, I'm willing to double down and put probably between double and triple that amount here, okay? Then the next level, essentially I'm probably gonna aggregate the amount that I have invested above and double or triple that and put that in at this next level. Depending upon what happens, I have more in reserve. I have more in reserve and am ready to really pull the trigger. The next level is what's called the golden pocket, okay? And as we look at the levels, I don't get into percentages too much, guys. I just don't. That's not my deal. I don't like to get into percentages because you'll stop listening. It's the 61.8 and the 65% retracement, which means exactly what that means. And you don't have to worry about, the details of that. Just let the trading platform, let it compute it for you, okay? If you can allow that to compute it for you, that's great. But I do want to bring that up. It's called the golden pocket. That's the golden Fibonacci ratio. And I want to bring that up today because there is a little bit of a difference, and I want you guys to realize on the side of different trading strategies, we had a perfect confluence, okay? There was a perfect confluence. I mean, not coincidental, guys, not coincidental that the confluence here between the 20-day moving average and this Fibonacci retracement is like a perfect storm. That's why you guys got in and probably made your 10%. We had this price target set up with Fibonacci's. It happens to be concurrent with the moving average. That red line is the moving average, okay? So, good for you, Kurt. Good to see you here, brother. The rocket launch lasted till 3 a.m. for you. Good. We were just talking. I know some people got in and made 10% on that launch as we were watching it cruise back up into about 18 cents. And just the dynamics of this group, guys, you're literally, the group likes to make 10%. If we bring just kind of recent news or something else, people like to get in and make 10%, and that's it. I just want to make 10%. That's okay. I mean, if you can do that 7 or 8 times, you're gonna double your money. So that's fine. You know, that is a strategy to get your account from 1,000 to 1 million, or from 10,000 to or 20,000, or from $100 to $200. If you consistently can do that. So if we can assist you doing that, we're glad to be able to participate on that. As we look at these different levels going down, the approach is to mitigate your risk. At the higher levels, you're going to have more risk because there hasn't been this healthy required retracement at all, okay? Now, this is looking on the macro of the entire price action of Harmony 1. So as we look into the different levels, we saw a huge level and effect within the previous, I want to say 24 hours now. We have seen a big movement. We may not be fully done, because I'll tell you what would be surprising is if after these kind of little pauses that we have had, if it continues to go up, it may, but it's going to require some market maker action, some magic from the market maker. Just going to tell you. Because at this point of about 24 hours, for instance, in and around and I hope you guys are learning, in and around the 27th of March, okay, around the 27th of March, you experienced a 32-hour window of time or period of an upward price trajectory, right? Right now we're at about 24 hours. Now within that 32 hours of price trajectory, and as you look at the other price trajectories, they look relatively smooth. This one has a bit of a hiccup, then it continues on the upside. This one, very smooth. All these trajectories, look at the cursor. They have very smooth, okay, just kind of upward impulses. It's a very smooth impulse. We don't necessarily have that here. We have a bit of a crowned top, and that may be indicative of kind of a limitation that's been reached. What I want to talk about is where do things go from here. I've highlighted in the yellow because from my standpoint right now, nothing has changed. And with additional data coming forth in the terms of the price action relating to this dynamic, this upward trajectory that we reached, the rocket launch that we had yesterday, the 30 to 50%, depending upon where you got in, or a 30 and then a 10, or a 20 and a 5. I'm not sure what you made. Okay, I just know that the price dynamics changed, and I appreciate you guys for letting me know. You guys, when you update me through Twitter, etc., and we are on Twitter at The Kingdom. You can look up TheKingdom. This is the Crypto Kingdom. Look up The Kingdom on Twitter. Go ahead and follow us and reach out to us, and we will stay in touch that way. Look at Twitter at The Kingdom. Now, after this price action, I need some more data to be able to compute whether or not this overall dynamic has changed. I'm going to stick with this golden pocket. Now, the golden pocket is literally this next level of support. And if we are talking about doubling down, which is a standard industry practice, okay, that I personally follow, okay, when I'm going heavy into something, that's what I personally follow. Light on the top, more risk. We don't buy high. We buy the dip at calculated levels, okay? So that calculable level is going to be between. Now it may bounce, I'm gonna tell you, you may get a strong bounce in and around if, and let's go down that road in a second. The calculable level on the golden pocket remains at 10.6 up through, I'm gonna say 10.6. You have this moving average complication up through 11, 10 to 11 cents. If it starts to hit 11, you're probably going to see some action. Okay, that's your, just let's bring this up so you can see exactly what we're looking at. These stair steps. The red is your 20-day moving average. Okay, the green, this green staircase, 50-day moving average. So, in terms of the overall, in terms of overall what this is telling us, I'm trying to tell you within the calculations of the Fibonacci, you have potentially a complication with the moving average. Okay, that did not prove true. Okay, in and around this area of, it was a perfect coincidence, I'll say, a perfect storm here with both the 20-day moving average and the in the pricing structure, the retracement structure, those probabilities, those odds with Fibonacci both coinciding. It was a perfect storm. We popped back up above the 20. If we breach back down through this and we don't have the levels of support, that's why I need additional data, we may be headed either for a retest of the 13-cent mark, or we may be headed to the, I'll just say, the upper 10 to 11-cent mark and expect some additional, this is the golden pocket, okay? This is kind of the key ratio here, this golden pocket. That's where I personally see heavier amounts of investment. It is justifiable that heavier amounts of investment go in at the higher levels of probability based upon the pure academics, based upon the pure technicals, okay? That is what is most favorable, okay? That's your best hand and your best odds to play a heavier position based upon the academics, all right, based upon the programming and the charts, etc. So we would expect that this would be probably the best play out of this retracement if we can get there. And now we're talking about the downside positively. If we can get there, a lot of you are holding and want this to go up. Beautiful. If you can talk about the market on both sides, if we can get there, and that being something on the downside to maximize your returns, even those of you who are holding in this pattern, it may not be in your interest, okay, to go sideways and achieve some sort of odd consolidation for a period of weeks or months. Understand, retracement to the golden pocket may be something that's actually positive in terms of your price trajectory, your future price action. So that's that's key as we look at the circumstance and at the figures that you're presented with an additional play or a buy-in figure that you're looking at. So let me look at some of the news here and see if we have found anything noteworthy. Let's see. Got a few updates here. People talking about different coins. People wanted to know about that and that and that. It looks like we're all kind of up to date. That's good. So you have a few different options. Good morning, Heath. How are you? Let's do a few shout outs, huh? Shout out to Heath. Shout out to WT93205. I like that. I bring up the problematic occurrence that we had with Binance in and around this area of the 24th through the 28th. Yes, it caused a problem. It caused a little bit of a hesitation in the price, and yeah, they're on the hook for that. That's just the bottom line. We also had a little April Fool interjectory here. It was kind of a confluence. We still haven't lost the fundamentals of the coin, okay? And we do have positive price action at the specified targets that we're able to provide, that the calculations in the program, these are just program calculations, are able to provide us with the return expectations that they're giving us. Guys, it's still a phenomenal instrument to focus on, okay? I think short and long term, it's still continuing to perform. Yesterday was a crucial day, okay? Just the price action, what that tells us is that it's still got a lot of upward mobility, and we'd like to see that. Now we need to see either that continue, or we need to just see and kind of wait and see the pricing structure, that action continue to play out. We may have a trajectory to the upside. We may not be done. We're at about 24 hours, about 8 more hours we could get into based upon some of the previous runs that it's been on. Last, was that a few weekends ago, it had a positive 32 hours of straight solid, 8 solid 4-hour candles. That's beautiful. So in terms of the pricing structure, in terms of where we're headed, I'd like to see an opportunity around this golden pocket. Okay, I believe we'll get some degree of strong interface if we do reach down. And it looks like this has been abrogated a little bit in terms of and you guys, if I'm using fancy language, abrogated, it looks like it's been cut short a little bit. Okay, this trajectory back up to the upside. I do want to explore this. I will go ahead and explore this. And actually, I won't. I'm not going to redraw or anticipate that the channel has been drawn now like this. I don't believe that is reasonable. It seems to be too much of a deviation. Okay, it's too much of a deviation from kind of the parallel pricing action. Too much of a deviation. Now, if they choose to bounce this, however they choose to bounce this, let them bounce. If they want to bounce, let them bounce. In terms of creating additional price action on the upside, that'd be phenomenal. That'd be great. We have exposure. I have exposure to it. You guys may as well. What we're looking for is to maximize returns based upon a lower level of kind of a security interest level based upon probabilities. And that's not me. That's just the actual probabilities that are being generated by the computerized trading environment. You guys understand that. It's the computerized trading environment that are generating these very, very basic, very fundamental entry points at higher levels of investment. Okay, why? Because they're more probable. If someone wanted to play in the top level of investment, I would tell them, man, you have like a 2%, maybe a 5% chance of winning. You're not going to do well. The probabilities are against you. So it makes more sense as the probabilities of gains increase, that the probabilities and at least the number of people in the overall market investing at that level is going to increase. Whether or not individuals want to up their own, and do a double down approach with some of the top fund managers and traders on the planet use, you don't necessarily have to do that. You just can understand at the more probable levels of investment, wherein you're going to, on the whole, the collective, the more probable levels where there's more people investing at those levels, pre-calculated levels, you're going to have more of an influx, more of cash, and more of a buying pressure, and experience more of a trajectory up. So it's literally like A, B, C. Yeah, 1 + 2 = 3. It's not complicated stuff. This is very, very, normal kind of germane conversation. A normal conversation to have. Okay, in terms of greater probabilities, okay, of an entry and a let's say a reversal of the retracement. You're going to have more people entering in at that point. So you got to experience that yesterday. Congratulations to the people who got 30% on their money or in excess thereof. If you have entered, around this zone and we have pulled back at all from the ideal entry point to about right now, I think you're at practically zero. I'm not sure if anyone has hopefully no one has stayed up all night. I did cut off about midnight and say we need to go and rest a bit. So I want to make sure people are resting, taking care of their bodies, taking care of their families, seeking that advice from a financial advisor. Okay, if you choose to do that. I don't think that financial advisors are going to advise you right now on Harmony One. Some are getting to the point where they can advise you on Bitcoin, etc. And we're fans of Bitcoin. As money, goes out of Bitcoin, as Bitcoin drops, we should see Harmony One do well. That's the previous nature of the correlation, or the negative correlation. It's a negative correlation because as the money flows out of Bitcoin, all right, it typically will go into altcoins, okay? Unless everyone goes tearing and screaming to the streets and there's, literal, everything is burned down, unless they burn down the crypto trading space, etc. And there's just so much advancement right now. We're really looking forward to a positive continuation of the bullish trend while these institutions get involved on Bitcoin and some of the larger concerns. So we are looking forward to that. And so essentially the purpose of this short stream, and it will be relatively short because I want you to focus in on the question presented. The question is whether or not, or if at what level, we will be able to re-enter and achieve a maximum gain. Okay, for you 31 who are here and everyone else listening afterwards, we've added in a little bit of issue into that bigger overall question. At what point will you, okay, will you be able to enter at a position for overall gain? Now, we can do a micro here. I would like to see for maximum gain, I'm going to tell you for maximum gain, it's going to be the golden pocket. And the golden pocket is at those levels that we discussed. And it's in contradiction, that maximum gain is in contradiction now to the moving average, okay? So that 50-day moving average is in excess of that golden pocket, but it has already busted through the 20-day moving average. It has respected our Fibonacci levels instead of this moving average. I'll tell you that. So maximization of gain, you may want to play, 10 cents, all right, 10 to, if you want to recognize the moving average at all, 11 cents, 10 to 11 cents is a beautiful price entry. Statistically, the program is telling us that's a beautiful price entry. That's just it. And that's why we're still on kind of this downward trajectory. Now I need more data. Okay, I need more data in order to be able to compute, all right? In order to be able to compute this pricing action. Let's see. If I go, for instance, to draw a Fibonacci, okay, on this most recent and go into a micro element here, all right, I want you guys to know how these are drawn. All right. Now, this is going to be interesting for you guys to look at. I want you guys to look at this. All right. This is essentially a very, very micro look. This is like intraday phenomenon, okay? This is a very micro look at. Now you guys can see, I mean, this is precisely why I draw these out. You can see these are not my calculations, period. These are the inherent calculations within a trading program, the most popularized trading program. It's on your phone. You guys are aware of. I mean, you guys know TradingView. I don't have to plug the fact this is all kind of pre-calculated. These are natural order market levels. Now, as I put this up here, okay, as I draw this Fibonacci, this retracement pattern up. Assuming, this is a big assumption that we have reached the top level. If that is the assumption and it's going forward and you want to get into the microcosm of assuming that we have a retracement to within this smaller level and you want to get into a micro trade, I'm going to bring up the possibility within that, okay, that you may want to look at your Fibonacci level even there. And this is for people who want to play the intra, okay, kind of the intraday trade. And then day trade, maybe we trade one today, one tomorrow, maybe we flip a few here, flip a few there. All right. If we're looking at this, however, if we're looking at taking our scale down, you guys should be able to learn at least an approach. Okay, you may not have the exact answer you want here, or you may. Okay, let's see. Let me get into. Excuse me, let me get through this. What do we have here? Let's see. Okay, great. All right. Now, as we look into, this is your Fibonacci application. This is the first time we've done this on a real macro scale in a while, or in a micro scale, from the macro to the micro scale. First time we've done this in a while. Okay. Now, I will remind you guys, and you know, that we have exceeded the golden pocket a few times on different trades, on different micro levels, okay, micro intervals. We have exceeded this golden pocket ratio a few times, all right? So in terms of trading this, it becomes dangerous. Your risk is going up as you trade this. All right, this is a risky endeavor. You're on a downward sloping channel. You are parcel of this retracement, and you're going to pinpoint, get in, And now you have a few different corrective, but this is how the price action is built, guys. You want to know, it's all just random? People just randomly get into a market? No, you have certain folks that decide this is a key level of support. I'm getting in right here. Some may be random, but you have people getting in and around this area saying, well, this must be a key feature. You wonder, well, how are they finding this feature? I don't know, they've calculated it somehow. So people have gone through different features, okay, of the pre-calculated levels of probability here and said, okay, look, let's look at what would be essentially kind of a golden pocket. Okay, this maxima, typically it's regarded as the most favorable, okay, level of probability to return to. Okay, now we discussed the 11 cent to 13 cent. Okay, and we gave it upside to the 13 based upon the 50-day moving average. Okay, on the overall, on the macro right now, in terms of Harmony 1, where we see a good entry spot right now. Now, if you wanted to play this, now we're not sure that this is the full specter of the full range of the upside. It has represented about between a 30 and 50% return on your money, depending upon how you play this. We gave you a nice entry spot. Okay, we gave you a nice entry spot, and we just gave you what the program told us. The Fibonacci calculations told us. Always do your own homework. Do your own homework. Let's look at this. As we look at this golden level, I will just remind you as a fact that Harmony 1 has not always played by the rules. Okay, in terms of pricing action, it has gotten into the gray. It has gotten past the 61.8% or the 65% of retracement, and that's all we're doing is measuring from the peak to a potential retracement. Now it may blast on through. I'm giving you kind of a way to analyze and look at what a potential on a micro scale to look into day trading. We do have the discourse, you guys know that. TikTok, you may have that discourse address. If you can throw that down in there, that'd be awesome. I can try and pin it here in a minute, so you guys can join the discourse. I'll try and make sure and do that early on from now on. Yeah, but if someone can throw that in, I will pin the discourse to the top here. You guys also need to know, I will never contact you in the comments and tell you to contact me via WhatsApp. Okay, I never do that. And I'm never sitting there saying, contact me for investment advice and contact me on WhatsApp. That's not me. They do a slough off account. I report them, but YouTube doesn't take. I don't know. They probably have a billion of those guys. They're probably bots. So I understand that. So as we look into the pricing action and the retracements, be warned, okay? Just be forewarned, beware, okay, that we have surpassed this golden ratio in the past and gone into the gray. Okay, that's on a micro level. That's on an individualized price action event wherein, and I can show that to you, but that would look like, essentially we're saying, well, a retracement would be probable. Decent level of support might be around 14.8. Okay, you'll probably see a little bit of action around 15.9. Maybe risk a smaller amount of cash. Okay, in and around 14.8. Maybe double that smaller amount of cash. Maybe in and around 14.3. Maybe we double, triple down. Okay, that's smaller amount of cash. Maybe within this, we start to play a little bit heavier with wherever we're at in this zone. Now you have to equate that with your overall paradigm as you get into, we're still out of the zone of this teal, which you just made 30% on a heavier weighted basis in terms of your cash position. You just made 30%. Okay, that's good money, guys. That's a good return. Period. You can't add hyperlinks in the message, gets deleted by YouTube. Okay, maybe I can just bring that over real quickly. I think I should be able to. Let me make sure I get you guys that Discord, because I know a lot of you like to use Discord. So let me see if I can bring that over. Let me see. Beautiful day, Harmony 1. Okay, that is cool. Let me see about how do I invite friends? Search invite members. Let me share the link. This is easy, guys. Let me see if I can pull this into the, where is our YouTube? All right, here you go, guys. Here's the Discord. I will throw that in there. And there we go. I should be able to pin this. I think I can pin this. Pin the message. All right, there we go. There's the Discord on top. That took a while. Remind me, guys, to do that earlier on in the thread. And it seems like people are more tuned towards getting involved at night. The nighttime price action is nice, so we enjoy being a part of that. It was fun last night. And just a launch party. I mean, it was a good day. 30%. Everybody making money. Made a little extra cash at the tail end of it. But as we look at this retracement, okay, if we're viewing this as an event, now I would have preferred to have viewed something up in excess of the channel, because I don't want to necessarily trade the channel. You guys understand that? I don't want to trade the natural volatility within this channel. You see my hesitation for getting involved in this level? So when I'm talking about what would I put in here? What would I put in here? I'm telling you, Harmony 1 right now is not giving me clear indications that I really want to. I'm being, if I'm risk averse, which I am, I'm not wanting to, plug in features in terms of cash and even smaller amounts, and go kind of a micro strategy. It's funny, MicroStrategy is the name of that company, huh? Tom, his name is what? Michael Saylor. I'm sorry, not Tom. So if I apply a micro strategy to this, no affiliation with Michael Saylor and Bitcoin, but if I take my strategy to the micro level here, I'm going to be investing a touch in here, a little bit more in here, probably doubling down that little bit of money here. I'm tripling down that little bit of money here, and then I'm going heavier that little bit of money here. The issue is that's all going to equal some probably smaller amount of money with some upside potential. If I were to get to this level that it's already hit, I'm probably doubling or tripling whatever that amount of money would be. Now this requires an incredible amount of time. Watching this thing react and behave. That is how you get into day trading. You guys understand the discussion that I'm just having right now? That is the quintessential of day trading. Finding your support levels, your probabilities, determining that yes, at this level, I want to invest, I'm going to invest $100. At this level, it's going to be $300. I'm doubling, tripling down. At this level, I'm going to add that up. It's been $100, $300, that's $400. I'm putting in $800 at this level in the teal level. Since we have additional, that's let's say 8, and then the 4 is $1,200. At this level, I'm going to triple that. I'm putting in $3,600 at this level. So if you get into this, then $3,600 and you're $1,800, and now you're at what's 36 and 18? Because someone do the math. It's very early. I almost refuse to do it. 36 and 18. 4-1, is it 54? I think it's 54. If it's not, I'm not going to do math this early. I think it's 5,400. So then you're in 5,400 on this little box. Now, I start off like that. Do you see how this compounds down? Because if it goes up and we hit that mark within this trading pattern, that's phenomenal. Now, that's $5,400. That's a $5,000 trade that I'm applying a micro strategy to, which encompasses the whole overall macro approach. And you guys just are getting a Day Trading 101 seminar and an invitation to go study the Oxford program. That's all this is, education. But understand, you may go through the whole Oxford education and never learn that. All right? That's just a logical flow, kind of a double down approach. And when big guys get on the TV and they talk about that on Bloomberg, etc., that's essentially what they're talking about. This is a trading strategy to get through. Now, what's the issue? If you spent $5,400, all right, and that got there quickly, guys. That got from $100. Well, I'm going to double that or triple that. I'm going to make it $300. Well, I'm going to triple that. Okay, you get there very quickly. Okay, that's why you have to have cash. And when I talk about, just putting in $100, you see, I'm not joking either, huh? I'm not joking either. At these top levels, there's more risk. All right, and see, you'll get a lot of these bounces in the meantime here to where, you're in this trading channel, you're putting the cash in, and you're checking out with 10 or 15%, which makes a difference on these higher levels as you get into the different levels of money. And then you'll get into the circumstance where it will recorrect, and you got the higher level of number at the bigger probabilities of the return function, and bam, you're really into it. All right, so that's how you maximize returns. Now it's very capitally intensive. You're going to require a lot of capital of yourselves. I hope you guys understood that lesson right there. I hope you paid attention to the higher levels within a kind of a microcosm of the micro trading channel that you're in. All right? That's key in understanding how much cash layout there is to fully protect yourself in this level. That's why, instead of the day traders are us like that, you know, you may choose just to go in light. After that discussion, you may be like, well, I'm just going to go in lightly. You know, that's it. With Harmony One, it's one of those circumstances that you just need to understand the nature of it and how things are going. Given the fact that we have pulled back into, I'd say we have a nice trajectory. I'd focus on the golden pocket, and I did want to bring to you that micro entry approach. We don't have enough data yet to do that. I will go back out for the purposes of you guys, and I would just say nothing has really changed aside from the fact that we do have the moving average, the 200-day moving average, a little bit above the lower Fibonacci level right now, which is 10.7. Okay, so just understand that between us, this 10.7 to, let's say, 11, 12, 13, and around here, and we'll be able to calculate that. But we also want to just, you know, focus on this area as we approach the golden pocket, and I don't guarantee anyone anything. But what I will say is that we're probably going to get in a position where we will have another, phenomenal event. May happen very soon, but a phenomenal event where we're able to have a very nice stream, and we'll be able to say, well, guys, look at what we have done. Look at this. This is great price action, and these were our levels. Okay, so I'd say nothing has changed to the tune of, if I can get this right there, perfect. Nothing has changed with regards to this being our key zone. Okay, and I will even do that right. And this is key. This is a key facet. Let's see. What do I want to do? I can put why don't I put a little icon of some sorts here? Not a rocket let's see. What do we want to put here? I can put a thumbs up. Okay, I want to put a thumbs up right here. Okay, so however you guys define that, wherever you want that at, I'm going to put a thumbs up right here. Now that's just a level of probability. That's all this is, just a level of probability. Okay, we can make this as large or as small as we want. But in and around this area, I'm going to tell you the train may be leaving the station. Okay, if the train doesn't leave the station, we have a heavier level of acquisition on the downside. So that's just it, and that's about where you guys can see this thing going. If you don't want to play the macro, if you want to play the micro, we just went through that example. Okay, and you'll know that we went through that example, and now you're starting to see what makes up this price action along the way. It's people making determinations like that. All right, so that's good. Let's delve into the comments a little bit and see what you guys have going on this morning, because that's essentially what I wanted to cover. That's exactly what I wanted to cover for you guys that are hardcore in here. This is why I started up the, what was that? Is the Discord? No, the Telegram was Crypto Day Traders. It's a personal account. It's just me, but Crypto Day Traders. I think it's cool. Assimilate some Crypto Day Traders. That's with a K on Telegram. Let's see. Leonard, I need moderator status. Yes, you do. How do I give you moderator status? TikTok. What do I do for that? You let me know. That's great. If you need moderator status, I'm welcome to do. I'm happy to give that to you. TikTok Hive Shorts. Leonard sent you a PM details on how to make moderator status on Twitter and Discord. Hey, awesome. Yeah, I appreciate that, TikTok. Guys, TikTok has a very good background here in terms of Hive Shorts. Hive Shorts has a very good Mr. Shorts. The shorts are on. But yeah, he's got a good background in terms of trading. He's got a lot of history, and he's got a really good, a really good educational background as well. You've taught government classes. You've done all kinds of things, maybe government contract classes, etc. I'm not sure exactly how that's gone or what your details are, but not to get into business. But yeah, really great dynamic past and background, and past and being influential as well. So yeah, we can definitely look at doing that, and I will make sure that that gets done. What's up today? It looks like BNB is up today. Okay, that's all right. Showing at 418. Interesting. Not sure if you guys are involved in BNB. That's something that has done well. Yeah, I will get to that very, very shortly on Twitter and Discord. Right? If you send me those instructions, TikTok, I'll take care of that. Before we go, I just wanted to present this information to you guys. This is the key type of information, reinforcing what we've already covered with a slight variation on the moving average. If the moving average comes into play, now we didn't have any moving average at all with this 30 to 50% return. We just didn't. So you guys know that. We did not. So, and yeah, those are nice credentials. TikTok is this TikTok Hive Shorts. The Blue Man. We need to come up with a name for him, huh? Blue Man. I'm not sure what we want to call him. Maybe the moderator. We may just call him the moderator. And if we put you as the moderator, we may have you put something like moderator in your name or something. So we may look at that, because I've been on other platforms and not known whether or not a moderator was anybody to be trusted or not. So we may just put like an M on there on your name or whatever your handle is. We may do that. Real party as well. That's good. Good for you. No problem. Let's see what else. So we have incorporated our decision-making tree. If we're looking at probabilities and the decision-making tree as it's compared up with the probabilities, we've added in the moving average. Now getting into the just the comments real quickly, and this is for the select few guys. It's early in the morning. A lot of people going to work, etc. What do you guys need? What questions do you have that we haven't covered? We've covered the entry points. We've covered the variation with the kind of with this. I'll just say the blue level. Okay, that heavier blue level. We've covered that. That's still in play along with that moving average variation. We've covered kind of the micro strategy if you wanted to get in and replay this element. Now, the benefit of replaying this element is to the extent that we're going to move to the upside and break this trend. Understand that's why I brought up the Fibonacci retracements. I do need more data to see whether or not this price movement is finished. But using this, listen guys, using this most recent price activity to the upside, if we are to continue to the upside, that's why I brought that up. Because whatever your exposure is in this level, if you want to play this next trajectory up and assume the reversal, okay, and assume that reversal, then you'd want to play at the different levels on a micro scale. It's going to require you guys to be involved on like a day trading level, okay? That's important for you to understand at the micro levels on the retracement, the Fibonacci retracements. We place this in. I'll do it again. But understand, if it does not want to cop out and it doesn't want to test this barrier, this low, okay, that we achieved in and around this 13-cent mark, if it doesn't want to do that and it wants to move up, okay, now you're going to dictate if it's going to move up. That, or it may be an institutional investment. Some different things may be triggered. But as you look at this micro, okay, investments go. Now we know what in the red. Look very closely at your screen. We know in the red what if we're gonna trade this, and this is just strategy, okay? This is just strategy. If we're going to trade this, and let me pull this back out, I want you guys to understand your overall exposure. If you're going to trade this most recent spike, okay, this most recent spike, what's going to occur is you're going to have the same layout, okay, in your overall exposure. And I'm going to walk this through on the levels here on the left, which increase as you go lower. You're not going to change that. You're not going to change your level of exposure. You're going to look in and say, if this is the peak, at the red level, we have an investment of 0. Okay, that's just the truth. Yes, we broke out. We went up to, we made 10%. Great, okay. At the red level, if this becomes a retracement scenario, we have an investment of 0. In and around here, we may justify some smaller investments. We may start to kind of double it. We may start to triple it, and really get into it, and then triple again. We may triple again. Whatever your figure is that you have to incorporate into this ride potential here, you need to do so with the understanding and the caveat. Okay, the caveat is that literally may just turn back into and disappear into further retracement. And be prepared, whatever that amount of cash that you're able to throw in at those specified levels on a graduated level, okay? It's a graduated heavyweight investment approach. When you're able to do that on the way down, as this retraces, if it is maxed out, that is a micro strategy, guys. That's a day trading strategy. It's an application of the fundamentals of the program benefits that you're given in TradingView and whatever other calculatives you can use. But those are the striated levels that will maximize your return if we return to the upside. If one of those retracement levels is enough and we return to the upside. Okay? So if, however, we are still viewed as being in a downward trajectory and we need more data, I need to see what this is going to do. I need to see how long this is going to last. Are we going to get into an element wherein we're bouncing on along and we're defining a new separate channel? Is it a new outside separate channel of retracement? That's going to be fundamental in looking at whether or not we look at this as a trading event, or is this going to, could it delve back into the channel now? If it chooses to do that, that's going to affect, and how quickly this does drop is going to affect how much I'm willing to trade this on the level of retracement. Okay, on the downside level of retracement with increasing levels of cash before we get back down to this teal blue level. You guys who are listening, I know you are making sense of this because you're not busy in the chat room. You're listening to this, and I know you're watching because this is day trading. Okay, it's higher exposure. Okay, at the most probable levels. Okay, still limited by this this foundational support level, wherein whatever you've risked during the entirety of this level. Okay, and I'll say this level being the entirety of this most recent uptrend, this most recent spike in price. All that is heavyweight approached down and accumulated through this portion is going to be magnified, and I would say doubled, tripled, once you reach again into this area of the teal, which is then what? If it chooses to go down to the purple and get into the golden pocket here, and that's just a ratio, the 61.8 or the 65%. That's the most probable statistic for the health of the growth of this asset of Harmony One. If we get to that, then you're going to have to make the decision, and you want to talk about a scalpel. I don't want you, to have to make this decision. I'm just going to tell you in between 10.6 and about 11, maybe 11.5 by that standpoint. We'll have to watch the moving average. That's why I've just got the thumb mark up here, because that's going to be kind of a variable discussion here, but it already has blasted through this. You're going to have some serious fortitude to get through this trade and to get through the calculated events of the retracement here. But I'm going to tell you guys, if you trade, if you're involved in the market, if this is what you do, and if you're good at it, people want to know, well, how do you get good at something? Well, I really want to trade. I really want to become a good day trader. I really want to focus. You know what? I'll tell you, if you really want to focus, if you really want to perform, this is the level, okay, that you can begin to incorporate, okay, some real strength in terms of your strategy, in terms of your approach. But you're seeing this is not easy stuff, guys. This is some stuff that requires, a huge amount of attention to. All right? Now we're talking about, look at this. We're talking about drawing retracements on a recent pricing action. We're talking about that in the context of having a double weight approach, or a double down approach, a heavyweight approach towards the downside here. You're saying, okay, I'm not going to invest in the top. Don't ever buy you buy a breakout, make 10%, that's fine. But don't ever invest on the top level. Never. And I wish someone would tell this to all the new people who are investing. Never invest on the top. You let that dog rest, all right? You start to give it a little bit of action as it gets down on through these levels. Now, these are the Fibonacci levels. I hate to even say that. The different levels of probabilities. As you get on down through the retracements, these are retracement levels. As this price action goes through the retracements, it becomes more probable that it's going to go back up. So it makes sense for the cash to be more heavily laid into the more probable levels. Okay, so that just makes sense. But as you get into that, if you're going to structure and lay out your investments into this retracement period, okay, we're talking multiples of multiples down on each level. Guys, you're going to be watching this thing. It's going to become a calculative event, and you're going to be day trading. And it's nicer just to kind of pick out a generalized, level to say, well, I might become involved. I mean, that's going to be a lot of work for you guys to do. You can do it, but you want to know, well, I want to be a day trader. I want to go work on the Wall Street. I want to go, I'm going to set up my own account, have my clients, everything else. Your clients may expect you to do that for them to maximize their return capacity within this ratio. Now you start seeing why people play with a lot of money in the market, and big time players have people doing this all day long. Guys I hire, my top guy I hired, period. The guy I hired, the principal chief of the hedge fund, he was a top trader on at First Boston at their bond desk, the #1 guy. But he's going to do this stuff, and I'm going to explain this to him. He's going to explain it to me, and this is the strategy. That's why he's #1. If you want to be #1, if you want to play like a pro, this is the level of dedication it takes. Okay, I'm going to get in with this whole price action here that we just experienced yesterday, the 30 to 50%. I'm going to draw my retracement levels and have a graduated, kind of a heavyweight approach where each level that goes down, I'm going to accumulate at a certain dollar amount and multiply that dollar amount as we go down to the more probable levels where we see another uptrend. Okay? Heavier weight investments towards the bottom. Okay? So, and I'm going to gauge all of that and that investment. This is the kicker. Not only am I going to pay attention to it to that level, okay, but then I'm going to say, on top of all of that, once it reaches, now this is the thing, the double down, triple down. That's level 1. The level 2 is doubling or tripling all of that into the next level. And then you can kind of relax. Okay, I'll just tell you, then you can kind of relax. All right, you don't need to be that micro with things. You may want to hit this at the midpoint. You may want to hit it at the golden ratio, that's 61.8. Okay, and I'll draw that in, the 61.8. It's dipped below that, but you get in. You see the level required for trading. You see what is in that phase 1. Then the phase 2 is what? The phase 2 is doubling or tripling down in this teal zone, because you just made 30% of your money in the teal, right? But you may catch it on the upside if we've reversed this, if we have reversed this retracement. Now, time will give us a better picture of that. So I say I need more data. It will explain whether or not we're still in the retracement or not. But that's phase 2 is, well, in the teal, we've got 2 to 3 times that to mitigate the risk in this. So you're not playing with heavy money in and around here necessarily right now. You're not. Due to the divergent nature of the price recently, the corrective nature of the price, we're not in as solid of an uptrend. So that's the level that I would gauge out the risk. Bottom line, that's the level that I would gauge out the risk. Here, we have a very clean pattern on the upside. Here, we're still trying to find opportunities in heavyweight positions to go ahead and make 30%, right? Go ahead and make our keep for the week or keep for the day, right? So understand the micro level, that's phase 1. Then we get into phase 2, which is the double or triple down here, and the phase 3, which is this golden pocket, or let's say the moving average and golden pocket. It's going to get real. We're going to be splitting hairs there between a moving average and a golden pocket. That's all assuming that the market maker does not decide to go ahead and thrust this thing into high gear. I wouldn't count on that. I would deal with the probabilities, okay? Dealing with these probabilities, I don't think you're going to lose. Let's go, family. Got the Discord now. Hey, all right, brother. Way to go, Yoski. Now, I wanted just to bring this to you because this is kind of the micro analysis you're going to want to do, the micro strategy you're going to want to apply on this upward price action. You guys know that. I want you to be able to at least understand one way of trading, day trading, one way of an approach if you're going to be involved in this, in the capital allocation. Because guys, at the top level of this, it's zero. Okay, until you start the retracement, it's zero. No money is invested right now, period. okay, in terms of additional capital, et cetera. I'm not investing anything right now until this thing shows me the top, period, until that's confirmed and we actually have a pattern, okay? This becomes very identifiable on this portion of the Harmony 1. We love that. We're gonna trade that aggressively, very aggressively, and we did up through here. We made 30%, bam, right? Yeah, at the channel, we made that and called it, made it, everything else. We called this, made this, bam. Last 2 weeks, we've made that. Over the past several weeks, it's been 20 times. So there have been hits all along the way. We've been very accurate with the levels. It's just mathematics. But I want you to know we're getting into a position where I want you guys to also look at the quality of your life, look at what all you're doing. If you're going to do this full time, I would recommend some additional education. And I tell you a lot of things for educational purposes, but understand how complicated this can get. Do understand that that may amount to a $100 investment, or it may amount to a $500 investment for you. With the understanding, or for me, okay, if I have 500 in at this level, I may have 5,000 in at this deal level. If I have 5,000 there, I may have a triple down. I may have 15,000. Okay, down at the blue level. Okay, that's just based upon the probabilities of it being healthy, a healthy position for the stock. And those levels are given to me. The rationale is given to me in terms of the risk mitigation and more cash at lower levels. I get more volume. So every price increment on the way up, I get essentially any losses from the top side covered. Okay, so it's just an approach to make money. It's not necessarily like doubling down at the roulette table, because I don't really like roulette. I won't even, you don't have trends in roulette. Nothing's verifiable. You literally are on and that's distinguishable. You need to understand, in roulette or gambling, it's very distinguishable from the stock market, because you have no idea where things are going. The stock market, it undulates, it oscillates, but it typically goes up. Your investments typically go up. You can typically see patterns and trends. In a roulette table, you sit down at a roulette table, guys, you have a 50-50 shot of something being right. That's not what we're looking at here. We don't want a 50-50 shot. No, we have calculated natural order levels of calculations of probabilities or retracements that deal with some probabilities that we're investing upon. We have trends that we're looking at. We have gain potential and natural retracements. We have phenomenons that go on in the marketplace, okay? So that's something we enjoy, the pricing action. It speaks back to us. It kind of lives and eats and breathes, okay, like we do. It needs to rest sometimes. It has a predictable behavior, all right? So those are the things we enjoy, and we enjoy capitalizing upon those. Let's see what we got. Good day all. Looking forward to the next launch. That's right. TikTok Hive. Let's see. Let's go. Family got the Discord now. Okay. Are there any other issues that you guys want? Let's see. That you guys want covered now. And you guys in a small group. This is probably the Discord group. At least we have some video on this right now. And this will get out to, I'll cut a short video, but this will get out to, probably 500 to 1,000 people ultimately will see this stream. So I'll cut another short video to kind of update the masses and push that out to get some generalized exposure, just to keep you guys supported in the Discord and everything else. We'll keep building. But anything else in the comments that you guys want to see on the price action, or any other questions that you have about the generalized strategy, or the John J. Murphy book, or commodities or futures, or anything like that you would like some more direction that I can point you in terms of education, or anything. What questions do you have, if at all? Any other questions? If I don't see any questions, I will cut another tape and we will disperse that, because people like relatively short tapes, and this has been a good in-depth little training session so you guys, so we can all discuss between the comments and everything else the day trading rationale. What I like, it requires a preservation of capital. People are not going, not going in heavy at levels they can't support or they can't de-risk themselves from. So you have to remember that. People just want to throw in, I'm going to throw in all my money into this, is going up. That's not rational. That's not what we want to see. About extended fib, not sure if you already spoke about it. I missed the first part of the stream. Yeah, we did talk about extended fibs. But thanks, Daniel. Shout out to you. Let me go over that in a second here. Essentially, with the extended fibs right now, we're looking to see whether or not, and we did talk about, we experienced a 50% return after the entry Okay, after the confirmation point here, we extended up to about, you remember that last night, about a 10% gain. This is the crowd. You guys want a 10% gain. That's it. I can't change your mind on that. You did that here at 15. You wanted the 10%. That's fine. You did that here at the 17.8. Both calculated entry points, and that's it. You wanted your 10%. You went home. You did the same thing here last night. You wanted your 10%. You're going home. You went in heavier, which makes sense. You went in heavier around the teal area, and it's nice to see y'all's structure in terms of the market, because you went in heavier. The majority went in heavier here, as predicted, and as should be calculated with the probabilities. And not just you; it's the overall market that we're playing along with. So our strategy is confirmed with the degree of price movement. Our strategy of investing more at these lower levels is confirmed by the price movement. That's positive in terms of you guys confirming, and us all confirming, that this strategy used by some of the bigger institutions does make sense and is functional for us. So on the extensions, the fib extensions, we're dealing with, we walked that up last night. We're going to see if we need more data right now, but we're at a position where you're essentially at a wash from last night if you didn't take your 10%. I want to see if this rolls over, and we just need more data. We let things rest overnight. It wasn't a big deal, and it decided to say, okay, you guys got 30%. That's what you got. Now that's consistent. We did discuss that last night. That's consistent with 80% of the price movements here. Okay, about 80% of what we've seen thus far is here, guys. Here's 30% on your money. Enjoy it. I mean, the program is telling us the entry points. Okay, we know that. You're either taking your 10%, which you guys like, and it's nice we got that on the tail end of the breakout. So I'm not sure we had to do that. I'm not sure we had to get in and discuss that and do the stream, but for anyone who made the 10% and rode that up, that's if we can do another stream and people can make a little extra cash, that's awesome. That's cool stuff. And again, it's predictable level. It's a predictable level. It's an exit from the channel, okay, from this trading channel. So the fact that it occurred, it's basic technical analysis. I gave you guys the book, that blue book that I showed you earlier is an awesome blue book. And let me bring that up real quickly. It's not easy reading, guys. I'll tell you, it is not easy reading. This technical analysis of the futures market, if you want to learn, you get into that book, I promise you will be impressed. What is this here? Hold on. What was this? This may be important, guys. What is it? Well, almost important. Natural information. What is this? Processing systems. I have no idea what that is. I thought this was kind of like the Harmony One logo. If you guys will see that on Twitter, the Harmony One has its own little logo. Now, one may be, I'm not sure what that is related to, but it's cool because Binance BNB has its own logo. BTC Bitcoin has its own logo, and Harmony One has its own logo. So if you put one, #1. So those are the only three that have a logo. It's pretty cool. But irrespective, that book by John D. Murphy is critical. So let's see. Fake out got me last night as well. Lost some money. Oh no, not much though. Are we expecting a retracement from here? Okay, Kent. Hey Kent, what's up, brother? Yeah, we went through kind of the entry levels on fake out. Not good to hear you got faked out on that. Yeah, I don't like to hear that because we had the rocket up in the gray area where you probably could have made some money, huh? Always on those zones, hey, we're pushing into those zones. Always try, and I always say, no one ever went broke taking some profits. So I'd like to know if Kent or anybody else, did you get in at this key level of support? I was on the fly yesterday, and purposely, I hope you were along with the ride that was light. That was, lightly invested, right? Lightly invested. We're in a light investment area, okay? As we look into this, guys, just remind yourself, look at the figures that I've been discussing. Just compute this, guys, quickly and seriously. Compute this in the top level. What are we talking about investing? Has it been, what, like $100? Yeah, like $100, right? This level, maybe, what was it, about maybe 300, something like that? Now, maybe 1,000, it may be 3,000, it may be whatever your tolerance level is. If you've got $1.5 million in the bank on the bottom that you want to throw in, or 11 or 10 to 15 below that you could throw in, that's you. That's your decision. But if you have a smaller amount of cash, I've been literally bringing up examples with $100. Okay, that's a hand of blackjack on your way out of the casino after making 30%. If you found, if you've devised a great strategy, you made your 30%, yeah, I'll throw an extra $100 on the way out. Bam. Now maybe 1,000 if you're playing with an account with 1,000,000. But we're in this upward zone. You guys get that? We're still in. Look at the screen. We are in this upward zone. We are at very light levels, guys. We're almost near the top where there's a no investment zone. So we're on that cusp. All right. So if someone say we lost some money, if it's depending upon I'm assuming that we're still in this level of investment strategy where we're doubling and we're tripling down right now. All right. Now, in the context of an established pattern, okay, those figures may change a bit. Okay, when we're in a defined pattern on the way up, when we're in retracement, it's where this stuff becomes key. Okay, so in the top levels, again, we're in this clouded, kind of this pale green portion. You guys know that. All right, we talked about investment levels ad nauseum. So we weren't playing heavy. If anything got taken off the books at all, it's something what, Kent? Well, it's something that you're willing and able. You're able. I almost said capable and able. You're able. You are capable of doubling down. Okay? If you say lost money, we invest with the notion that yes, and we're going to need to double down. Guys, the top traders on the planet, the top institutions on the planet are capable of saying, if we get in, okay, if we get in, we're literally going to be in at a level where we can double down. So it's more so got in, didn't lose some money, got in, capable and looking to double down this morning. That's it, guys. You see? Okay, at 17. Okay, 17, and it got up to, well, what did, let's look at the candles. Let's see, 17, let's see. And again, always with the double down approach. That is our approach. Always at the double down. And it's interesting because you've just reinvested essentially with, yeah, and you went at 17, you got up to, what was it, 18, 17, 9, 18, 1. We'll look at that. But understand as you're floating back into this area, you have gotten into 17.8, not sure exactly where you got in. So you were probably on the margin wanting to see it do a little bit more. And it could have. The market maker decided at the exchanges, and we discussed it, that you're not, 17 flat, you probably, you make a point on 17, you probably not, you didn't want to make 5%. You could have. More crucial to me is, did you get in at the heavier level below? Or did anyone pick up on just the new action, the new breakout, etc.? Because that's not the intention. The intention is to always understand, first of all, listen to the channel and understand the overall trading dynamics. Understand we're towards the top. Understand that the investment level here is going to be lower. Okay, and I brought up the example of $100. I gave everybody 100. You guys remember that in the stream? I gave everybody 100, and at some point, okay, what are we going to do with this 100? That 100 matches up perfectly with the investment scale, the strategy. Okay, and I'm playing with an icon. All right, the investment strategy to be doubled down or tripled down as we get back into this level. And if you guys want to stick with that, I have no problem with that. If you don't want to day trade or go through the Fibonacci retracements, etc., and you say, you know what, I'm going to keep it simple. London, I want to keep this simple. If it goes back into this zone, I'm going to double down what I had here. If it's $100, and I say if it's 1,000, you may have 10, 20, 50, 100,000 underneath it. You just may, guys. The purpose is not to overexpose yourself in terms of risk. You guys know I sent you out 100, all right? I sent you out 100 in the deal, all right? So that's for the reason that we're in the 100 zone, right? So it's showing positive price action in this area, right? Yeah. So that's cool. Let's get excited about it. Let's see if you want to, multiply the 100 by 20. That's all right. Now, some of you are holders beyond that, clearly, and you're not here just to play with $100. But, could have, sent out 1,000. Could have sent out 10,000. I sent out 100, right? So, in terms of the positions that you took and us having fun watching the price action after you've already realized 30%. Now, I got to say, after you've realized 30%, come on, guys. after you've realized 30%, and we've got we have 100 being sent out, it's kind of like, all right, maybe you went in heavy. We were talking about like 1,800. Okay, it could have been 18,000 at a zero if your portfolio allows for it. But yeah, let's just go in. And Ken, I want you to listen to this. All right. Always remember your investment levels. Go back and look at some of the videos, the many videos we've talked about those investment levels. It's about 100, okay? This may be about, is it 600? I don't know. You want to double it, you want to triple it. Whatever your scale is, you can work it down into the bottom levels here, and you double or you triple every time. You may want to multiply it by 5 every time. But it's a heavyweight approach, double down, triple down, quadruple down, quintuple down. All right, to where as you go into the lower levels, you are guaranteed essentially with any price action and movement to the upside, and this proves our point perfectly. Yesterday we saw the price action increase to the upside 30%. So anything that was lost along investment areas to this degree, we saw a complete recovery of that. We saw a complete recovery of that. So Kent, you're in now. Whatever you're in at now, I'm assuming you're involved in the channel. You've been around, and it's great to have you. I'm assuming you or anyone else understands the double or triple down approach. It's easy. It's so easy, guys. And it's not a phenomenal return. Everyone wants to get rich and buy a Ferrari. Okay, you can do that, but you're going to need the previous example I gave you with the day trading, etc. Guys, you want to live, eat, and breathe this stuff. You can either stash it there, not worry about trading it, in which cases the loss or the entry point won't bother you. Or you can deal with these certifiable kind of pre-calculated levels that are given to us by Fibonacci, okay? And we look at them as investment kind of probability and risk mitigation levels, and return levels, gain levels. We know this golden pocket is key in terms of kind of health, the overall health and probability of where it's most likely to go and we're most likely to make money. So I look at this, Kent, other guys, did you get in at this level? Because that's key. Do you understand the risk limitation kind of strategy that we impute here with very, very light investments here, right? Yeah, very light investments. Heavier here, double, triple down here, tripling down. We may add these together and triple that down here. We get into like $1,800 pretty quickly. I mean, if you say I want to put in $100 here. Some people may say 300, whatever it is. I'm going to triple that. All right, I'm going to put 300 in here. All right. Instead of 100, I'm putting 300 in. Okay, cool. Now I'm going to add these together. 3, that's 400. 400, I'm going to triple that. All right, 1,200. I'm going to put 1,200 in here. Now that may be, 12,000. It may be 1,000, 3,000, 12,000. I don't know what your risk tolerance is. Okay, that's not my decision, or that's not my role, is to evaluate your risk and to go through all the documentation, have you sign off on waivers, understand your position and legal authorities and federal road. I'm not going to be a Rhodes Scholar on your financial advice. That's not my purpose. That's not what I'm geared for. I'm geared towards education and teaching. Okay, strategies to capitalize on this 30% gain that we experienced yesterday. Capitalize also on the potential that we could get re-involved a little bit at this level. Kent got re-involved at this level, or anyone else did. Okay. Did you lose? No, we're ready to double down. You see? No problem at all. We're ready to double down. Anyone who's going all in at any of these levels towards the top has got major, major things to learn. You have to learn this, guys. You cannot go in. You cannot swing trade with your capital balance. You cannot throw in your capital balance into this area. Okay, you cannot do that. You cannot say I'm trading with $5,000 or $15,000 or $55,000 or $1 million. I'm going to swing trade everything into this. Guys, you can't do that. You cannot do that. Don't ever do that. Don't ever do that. Learn to trade at the different levels and learn what that can do in terms of the appreciation and value. Learn what 30% can do with the right amount of cash. Okay, invested. Learn what the 30% can do when you realize that gain. If you want to play around with the $100 equivalent investment, cool, no problem. Okay, now you're back in the game. Now we're ready to double down. All right, we get back into this previous level, we're ready to double down. It's already met resistance and received price action, like Kent's in a position now. It's already hit this bright green line. If it hits it again, guess what? We may see some price action. That's right along the moving average too. That 20-day moving average, it doesn't like that. It wants to kick up, right? So that's when you're ready to double down. Easy, right? It's easy stuff, guys. It's proving itself out. That's why these charts are important. They explain, they tell a story, okay? They educate us essentially on what the price action is and what the probabilities are doing. And I mean, we'd have to be ignorant to not realize that. On April 7th here, yesterday, bam, we reached another level here, and bam, we were ready to double, triple down. And yeah, more money in, bam, we gave you the exact entry point. And I didn't give it to you. What really gave it to us is the program. Just the calculatives. And I don't want to say the program because some people might not like the program. They might say, I do not like that program. I want a different program. This program doesn't work. Guys, the program is literally defined in science. It's a scientific calculation. So if you say, I do not like science. I do not want calculation, science, or anything mathematical in my financial world or your investment world. Well, good luck with that. Maybe you just want a hope and a wing and a prayer. That's fine. But I think the Wright brothers with the first airplane, I think they did something. They did some kind of mathematics. I think maybe if you just want to kind of, I think the lawnmower, if we turn it upside down, we can get this sucker off the ground. Well, I don't know. I wouldn't trust that, guys. I just wouldn't trust it. I have a good feeling about this lawnmower. It's blowing in the right direction, or maybe we just reverse the engine. We might get this sucker off the ground. You might, and it might get kind of dangerous, huh? If you flip that rotor upside down, you might get into something. Maybe you want to do some calculations. So they have gotten into the position here where these calculations and probabilities mean something. When I'm talking about doubling down, I'm repeating some of the important facets of some of the key investment figures on the planet, okay? So understand that. You take the lawnmower approach. Well, yeah, let's just turn that blade upside down, crank it back up. I think we'll get it off the ground. You can do whatever you think seems great at whatever level you think is great, but I'll just tell you it may be dangerous, okay? So if you're going to swing trade in 5,000, bam, here we go. No. The heavier investment levels, and again, I'm talking about, I sent out everybody 100, okay? I did, all right, ready to double down. And this is an institutional approach, guys. I wouldn't be educated, I wouldn't be logical if I weren't literally following the investment approach of the top guys investing in on the planet, And you guys wouldn't be intelligent, you wouldn't be listening if you didn't understand that's literally what's going on. If I mention the names of the people with this strategy, you'll be like, oh gosh. Yeah, big time money managers, okay? So it's a relay of the information. So just so you know, the 100, all right, or the 1,000, wherever you're at. And what is this? That's the double down. If you've learned a lesson, it's okay to learn the lesson now. Okay, you're maybe about even, I'm not sure where you're at, but that's the lesson. It's very light on top. Very light. We'd love to see this trajectory up, okay? If we don't get it, it's fine. Because why? We're very lightly involved. It's not going to ruin our day. The good news, you guys have, maybe 10 or 20 more years to invest in crypto? There's no immediate rush for you to make huge amounts of massive gains. There's just not. I promise. There's no immediate need for you guys to make huge amounts of massive capital. There's just not. You'll have the next 20 years to refine your strategy. All right, along the way, we're going to learn a lot. I'm not going to say we're going to be on this channel for 30 years, 20 years. That's not the point. But I've been investing for a while, okay? I've had fun. I've learned that, okay, this is very light. This is the light zone. Yeah, this is the light zone. Nothing changes. Nothing changes. I sent you out 100, right? Ready to double down, triple down, right? Yeah, okay, fine. I get it. Okay, everyone gets it. Okay, in this level, we're at what? Around 300 maybe. Maybe triple down, 300. Okay, then what's the total? That's 400. All right, 400, then what are you going to do? Maybe we triple down. Okay, 1,200, maybe 1,800, something like that. A multiple, okay. That's what the big dogs are doing. That's the strategy I employ, okay, in teaching, okay? Everyone is the big dog strategy, okay? Because it's very difficult to lose. You just made 30% on a heavyweight investment. So Kent is an example. He got back involved, and his risk is very limited. His risk exposure is very limited. You guys see the beauty of this? Yeah, okay? You guys see the beauty of this. Ready to double down. See, it becomes very easy, doesn't it? It really does, huh? So you see how the money's going to be made because you have more money at the lower levels. And it's still calculative. It's still, you're dealing with probabilities. So as you get into like, something like the golden pocket, the Fibonacci, the moving average, these things will move the price as people worldwide decide, yes, bam, at this level, I want to invest at this level of the Fibonacci. This is great. These are natural ordered, calculatives that are bred into the structure of your stock price. It's very nice of your coin price, of Harmony One price. This is phenomenal. I mean, this is fun. This is nice. So I'm glad, Kent, that we can discuss that because you brought up a good point. And let's see. Thanks for sharing. Yeah, absolutely. Shout out to you, Rick Lane. But this from running out of powder too soon. Now I have a good understanding of why. Good. Yeah, you don't want to blow up your account. Shout out to Rick. Yeah, and understand. You don't want a Ferrari. Okay, well, we'll drive your Ferrari for you. I'm very into cars, so I love cars. I've had too many nice ones. I don't know if you can have too many nice ones. Always respect other people. Let them drive them. If you have a nice car, if you have a Ferrari, let people drive it. Okay, that's what I say. I'll get a Ferrari, but I'm going to let people drive it because that makes people's day when they get to drive the Ferrari. If you have a jet, let people ride in it. Okay? That is just one of the most exciting things in the world when you get on your jet and people get on your jet with you and you stack that jet full of people and everybody's just happy. You're like, that's why we have a jet. All right? So that's the same thing with a Ferrari, okay? So you get a Ferrari and I'll tell you the best thing in the world is here. Here's the keys. I want you to drive this car. Now it may scare you. It'll probably scare you when you have, depending on who you have driving that Ferrari. But hey, you put your parents through worse than that. So always give those keys over. Always invite those people on your private jet. It's an essential in my life. I've always made sure to do that with whatever I have, and it just spread the love, kind of deal, kind of spread the love on that. Make sure you do that. It's easy to make the money. You want to keep the money. It's like, well, you got to share the money, or else it's no fun. You look back and the times that you share it, those will be the times you remember most about having it. Believe it or not, is when you're able to experience that and give that joy to somebody else. Here, go ahead and drive this thing. Come on, I'll get the passenger seat. You drive this car. So that's fun. Okay, Kent, you had no idea what the hell was happening in the first month. I know why I have been losing money. Oh no, I will take everything I have earned and apply it. Hey man, if you can get that down now, brother, I will tell you, you will, in all likelihood, based upon the best traders on the planet, you will begin to perform like the best traders on the planet, because that's what they do. They have a double down approach. And it sounds real easy. It's like, because it puts you at the poker table, right? It's like, well, I'm going to double down, tap the table, don't want a card, and I'm going to go ahead and double down. You don't want to think that way because it sounds like you're in Vegas, right? It does. But, I mean, literally, if you research, I don't want to tell you who, but if you research on Bloomberg, okay, financial markets, a recent interview by one of the top investors on the planet, one of the richest guys on the planet, literally has his representative in a perfect little suit, everything else. She's saying, yes, we are ready to double down at those levels. And it's just, all right, you can take it from an institutional hedge fund manager, etc. But that's the risk mitigation strategy, because Kent and everybody else listening, what we're doing, you got it, Justin, yeah, the bulls, we swing trading this, absolutely. We're swing trading Harmony One. We're into it. What we've got is a probability, Justin and Kent, everybody, as you go lower in here, as you go to these other levels, and we increase the amount of cash, because the probability of us getting a strong bounce increases. Okay, we're gonna have some price action at these levels. Bam. So we increase our price action. If we lose $100, I don't care if it is $100, guys. Have you tried trading with $100? And you think, well, that's not enough. Well, we're not even part of a club. We're not in it. There is no club for going broke. There's no club for going broke. If you don't have the reserves, okay, then that's is there a club for going broke? Because then you don't have any money to go hang out with anybody and do much. That's not the club. We ain't in that club. All right. So if it's $100, it's $100. But why is that important? Because the $100 turns into maybe $300. Turns into, and as I'm going down these levels here, turns into, look at the teal, goes into maybe $1,400, $1,600, $1,800 on the multiple. Turns into, now we're talking, guys, is where I talk about your allocation. Turns into potentially $5,400. turns into possibly 18,000, 25,000, 24,000. Okay? Now, on the level of investment, the $100 may be 1,000. Okay? The bottom level could be as much as 20 million. So when you understand the approach, you're not afraid to engage in it, because if you're playing with 10,000 on top, it's no problem. I put 10,000 in. It's fine. 10,000, no big deal. It's not $100. It's 10,000. But what do I have down here? Well, I have 25 million. Okay. See, that makes sense. You can build into a graduated scale of investment. And I'll tell you, in line with that, if the whole market were to go kaput, you have to love the fundamentals on your investment. Okay, you have to love the fundamentals, because you have to be prepared to ride this thing out for a year or 2 years. That's no problem. I love the story. I love the management team. I want to be involved with the management team. I'm going to invest with them. I've decided to invest with them. All right, that may be 5,000 down here. It may be 3,000. Whatever those levels and those graduated levels are, you have to be okay. And I'll just tell you, if and when you get to this level, if you were to ever get to this level, you have to love the company, because it's going to be difficult to stomach. But the possibility of you getting into this level, you're going to be investing. Essentially, you're going to be forming somewhat of a triangle. Can we draw a triangle? Let me see if we can draw a triangle. This will help you guys a lot. Let me see if the geometrics. Okay, look. What we are doing, guys, is we are forming this. All right. Now look at this. Because what you are doing is you are investing. And Kent, look at this. Everybody else, look at this. All right. And it's going to be even probably more so than this. It may be, this is the generalized idea. This is your exposure here, okay? This is your, collective exposure at the next level. And I would change this a little bit, but just for purposes of a rough discussion here. Very little exposure on top. More exposure, a wider degree of exposure here, okay? So that any move, once you've accumulated, and it's really going to look different than this. It's going to be like one, and then it's going to be maybe, it'll be one line here. Then maybe it'll be 3 lines within here. This will support like 3 lines. This will support maybe like, a multiple of that. Okay, maybe if that's 3, maybe this will support 9 lines. Maybe this will support, 9 and 3, maybe 10. Maybe this will support like 30. Okay, whatever that is, I want you to understand we're dealing with multiples, so that when the price action increases back, we have a heavyweight approach. This bottom line here is the $1 million. This is the $10,000. This is the $5,000. This is not risked. Okay, this next level up, this may be, the equivalent of your $3,000. Or if you have $1 million on bottom or 10,000 on bottom, this may be the equivalent of maybe a 5,000. Let's say 10,000, 5,000, 3,000, 1,000, 500, 100. Whatever those figures are, your risk exposure is very low, and it's going to require you to push down into a reasonable level before you're risking any amount of real cash. And if you push down into this reasonable level before you risk real cash, guys, it's going to start turning you into a better trader. I promise you'll turn into a better trader, because you're looking for this more reasonable. You're forcing yourself to obey kind of these ratios that are just aligned with de-risking, okay? And that these big institutional firms use. And it's going to require you to only impute your bigger amounts of cash. And the biggest problem is that people with smaller portfolios act like they have to risk it all in order to make any money. That's not the case, guys. That's not the way things work. You don't have to risk it all. You still make the same considerations. Well, I only have, 10,000 here. I only have 2,000, 100, 500. Okay, great. You risk $50, guys. at the top level. Now, you probably have, say you have 5,000, 10,000. Okay, at the top level, what are you investing? Not much. You have your reserve. We're not swing trading the entire amount yet. We're going heavier, a triple multiple in here, but with the understanding, guys, and I'm going to say this, with the understanding at the bottom levels, you have got the reserve. All right? You just have the reserve. Because what if you get stuck with this investment, huh? Do you want to just be stuck with, and you have to understand the original accumulation dynamics for this to go into effect. Because most people think that things work like this. You guys watch this. Most people think that things work like this. Well, we're going to get in at a low level, all right? And I'm going to put in my $5,000, okay, into Harmony One before it's worth anything. And then I'm going to have my $1,000 be worth $50 million or $5 million. All right? That's what people typically think. I'm going to put in $1,000 is going to be worth $50 million, or it's going to be worth $1 million. What's the problem with that? Well, you're investing, all you have is $1,000 or $5,000. The problem with that is you're going to want to take your $5,000. You're going to want to turn it into $1 million at this level. Now, this is completely upside down. Because the biggest lesson, one of the biggest lessons you'll learn, if this funnel doesn't always work this way, and that is a huge amount of risk, because your $1,000, what you're not counting in is that, well, your $1,000 is likely based on the probabilities from here. And let's just say you do that up here. Anyone can anyone can make this mistake, and almost should make this mistake. It proves that you're rationally related to your profit cycle. You understand what profit is. That's okay. What you don't understand is the dynamic of a falling price relative to its probability and likelihood of going up from that price. You want to over leverage, you're anxious to make the money, and you believe, okay, that if people here invested, and you're repeating the same cycle, if people here invested $1,000, they now have $1 million. That's what this represents to me. But you're forgetting one thing. Well, it's gone up in price, okay? The probabilities state that it's going to be going down in price before it goes up in price. It's going to need to retrace, it's going to go down. So your approach of leveraging all of your capital, swinging it into something to try and capitalize on this gain, it doesn't account for the fact that it needs to rest. Okay, it needs to go through this. All the billion-dollar and trillion-dollar concerns have gone through price retracements. All of them have. Now we define the levels within here wherein people are still making money. Okay, in and around this area, people made 10%, 10%. Here, 30%. Here, additional could have made 10%. With what? With light money, light amount of money in here. Here, a little bit heavier. Okay. Once we got into this area, I'll say, once we breached the red and got into the green, we were planning for a potential upside, right? Yeah. So, of course, we were playing with, a little bit of cash. Now, 100, maybe it's 1,000 for you. Maybe you have 10,000 down here. But don't be afraid to play with small amounts of money. Just don't be afraid to play with small amounts of money. If you can double it and triple it down later on, have the discipline. You have to force yourself to have discipline. Don't overexpose yourself to risk. I mean, you guys are throwing a financial, advice, conversation. It's like you would be defined against having a financial advice conversation, because a financial advisor would be legally required to talk to us about risk, and sign off on paperwork. You understand the user terms and conditions. You may lose everything. You are subject to the market controlled devices, etc. Yeah, you'll go through all of that. It's almost like you guys are so defiant, potentially and just inanely, okay, instinctually we are. I don't want to deal with that. I want to make money. Well, making the money, we have to realize the level of risk and normal pricing behavior. Every one of these almost, we have some degree of consolidation or retracement. Okay, look at this. After every single price action, we have a degree of retracement or consolidation, retracement. Here, even within here, we have retracement. And that's tough. We do have retracement. Spike, retracement. Spike, retracement. Spike, retracement. What we're going in through now is spike, retracement. Okay? Spike, retracement. Now the question is, where will this go? Well, at the higher level, we don't really care because we're prepared at very light levels to invest once we breach the red into the green. We're prepared. No problem. We're prepared once we get into the brighter green or the darker green. We'll throw in about triple. No problem. Now double down, triple down. Investment institutionalized approach. This is not, I did not craft this approach. Okay? This is something used by heavy fund managers, period. All right? It's available on, it's on CNN. I mean, you'll find it on Bloomberg. It's just it's commonly out there. It's open source intelligence, if you want to. Open source market intelligence. We can become masters at open source market intelligence. Open meaning anyone can look at it, okay? So as you look at the normal corrective action from here to here, and again, every single level has gone through a retracement, right? We're now in a pattern of seeing this overall retracement. People, you want to know, well, once we get in light green, we're going to throw in a little money. I send out like 100, here's 100. Okay, and if ever I give 100 to everybody, this is what I do. Digital 100, right? Bam. Now here, okay, and I did say if I could let everyone invest with $100, I would let them invest $100. Why? We're in this zone. We're in this 100 zone, right? Yeah. So if we get down into here, into this zone, in the Fibonacci retracement zone, well, I probably would triple down on that. It's already shown some indication here, going up about 10%. It doesn't like that zone. Maybe we're on the uptrend. I don't know. Become a little bit more interesting. We get down into this level because we've already experienced that, a 30% gain on that. I'd probably put in about 3 times. Yeah, I'd probably double down, triple down again. Maybe of the whole collective that I'm in already, of the 100 plus 300, maybe, that's, I don't know, maybe 100 and 300, 400, maybe I'd triple down. I go 1,200. All right, 1,200. But I have to have the triple down of that. I have to have that at the lower levels to cover that strategy, the 5,500. I have to have the lower, bigger amount in the gray level. That's where you get into your portfolio allocation and your risk assessments. That's why a lot of people you can't handle potentially, I want to invest in 5 to 10 coins. You can if you just want to acquire cheaply and you don't want to trade. If you want to trade, okay, it's going to require of you that you balance your risk and that you're willing to go deep into this, guys. And if you're going heavy in at the top, you're going to get sunk, okay? You're going to get sunk because you have to go through these retracements. Every retracement, okay? We've gone through every retracement. Boom, boom, boom. We're going through a retracement. If we get an opportunity on upside, cool, we're back, cool. Now we just made, at this retracement, well, we made 30%. I mean, exactly, the mathematics gave it to us. I gave you what the mathematics gave us and gave a lot of other people, guys. All right? Bam. All right. Well, yeah, and we broke out of the channel. Cool. All right, here's 100. I'm back in 100. Just 100. Yeah, I'm back in at 100 or 1,000 or whatever it is. If we got $1 million down here, maybe it's 10,000. I don't know. I'm back in with 10 grand. Okay. But that means I've got the double and triple down here, that I'm not swing trading the entire amount and just believing this same notion. And that's what's getting carried forward. You guys watch this. What's getting carried forward is a mentality, and we're stuck into this. Well, let's apply the history forward. Okay, so it's not intuitive, because people in the community who invested $1,000 who now have 10 times that or 20 times that. So you want to repeat that over here. You want to say, yes, I'm going to invest just like they did. This one has proven that you can invest $1,000 and make 20 times that. Yeah, $1,000, right? 20 times that. You can turn that into $20,000. What I normally tell people, when you consider that, is that it? And that's okay. Okay? Understand, is that it? Because everyone will say, okay, $1,000 into 20 times your $1,000. Okay, 20 times return on it. Okay, is that it? Because, guys, real wealth, achievable wealth, etc., is going to require a strategy for growth beyond a one-hit wonder. if you're leveraging big risk into this, 10 grand here, 10 grand another, 10 grand another, you're spreading out a lot of capital overlay. But I say, what are you going to do with $20,000? What would you do with 20 grand? Guys, we could spend that in a heartbeat. We could literally spend that, if not on crypto, we go, you can't put a down payment, on the car that you want to buy with 20 grand. Right? Right. Talking about Ferraris, different things like that. So when you look into that, to bring over that rationale to here is not copacetic, because you're going to have to deal with this downside, and you have to be able to double down, to triple down. Okay? And if you're looking at, you're going to apply this, well, I want this thing to go to $1. Okay, it's at 20 cents, ballpark at 20 cents. All right? That's going to multiply by 5. All right. Okay, we're going to get a 5x on this? Yeah, you get to the point real quickly. Is that it? Okay, what drives us into the market is the swing trade, is the profitability. A lot of us, we want to trade. We want the entry point. We want the rush. We want that positive. We want that interaction with the money and capitalizing. We want to know that we're kind of masters of our own universe. We want a strategy and want to be able to say, yes, this is how we're capitalizing. If they ask you, what are you? I'm a day trader. I day trade. Hey, wow, okay, wow, he must be smart. We know it's not easy. It's a big challenge. You guys are very calculated. It's not easy. But to carry over, first of all, this mentality, well, I'm just going to invest $1,000 like they did, and then we're going to make 20 times our money. All right, let's work on 30% at a time. If something's showing us it can do 30% at a time, let's work on reasonable, consistent levels, like in here, where we can say, yeah, I'm seeing 30%, 30%, 30%. We invested more heavily here. That's 30%. Now, what does it take? How many times do you have to hit 30% to double your money? Now, you guys know the rule of 72. Doesn't necessarily work with, let's say, 1 times 1.3 times 1.3 times 1.3. 2.19. You're going to double your money over double. You're going to achieve over a 2x multiple, 2.197 multiple. Okay, with a 30% 3 times. Okay, so this is achievable. I'm going to tell you this, between here and this is the gain potential. This is where I need you guys to listen. I mean, like, serious. Okay, this is maybe the most important part we've covered thus far. Is while this has been playing around 20x, we know since it has gone essentially sideways or down, that we have entered potentially into positions to capitalize to 30% return values. All right. Now they're at lighter levels, and that's what's going to get you. Well, it's at a lighter level. It is at a lighter level. Now, when will it become a heavier level? It'll become a heavier level when we go through the normal corrective necessary trajectories. Okay. And now I have this as kind of like a springboard. Okay, and you'll notice the further we dig this down in, this small amount of money down here, it doesn't have a lot of weight or ratio in it around here. You kind of hear the slingshot theory. The further we dig down into this area, I'm going to tell you the effect should be, okay, to where we really experience it. We're going to really experience something on the upside, and that's going to happen in concert with you having more dollars allocated to double or triple down approach at the lower levels. Because the rationale that will get you is, well, I can't just in London, I can't invest $100 because I'm not going to make any money. Okay, well, what's going to happen with your money while you're not making any money? I have to ask you that question first. What's going to happen with your money while you're not making any money? Well, it's going to be sitting there. Really? Okay. I want to make sure during this time period, while we're in a consolidation, while we're in a retracement, while your money, the majority of your money is just sitting there and you're not making any money, what are you not doing? We're not losing any money. Oh, okay. I got you. Okay. Or we have it in a different investment instrument somewhere else off the map, and that is going through one of these increases in capital. Okay, so it requires a capital allocation strategy. It requires you to kind of have things together in terms of, you have to have discipline. You can't just throw the book at this. Well, I'm going to teach this thing something. I'm going to teach this thing something. Now, I'm just going to throw the book at it. It's not going to understand anything you're doing. It will understand a calculated strategy. The further this thing goes down, we should be able to launch this thing after it goes through the appropriate level of retracement. So enjoy this time. If you put in a little bit of money around here, hey, fantastic. If you have to get out and you put too much in, recalculate, re-strategize. That would be the strategy that the top institutions are using that are involved in crypto. Okay, I'm talking about multiple, heavy, tens of hundreds of billions of dollar institutions, trillion-dollar institutions, okay? You guys know BlackRock? I think you do. I'm not going to speak about their strategy. What, 3 to 6 trillion under investment? Yeah, okay? Big-time corporations. The further you get into your more heavily allocated positions, boom, all right? And that's what you want to see is this boom. You hit it like yesterday. What do? Well, we dipped in from the quasi-normal $100. That's boring. All right, then we got to 500. Fine, I put 500 in. Okay, great. You have, maybe you have 70 grand or you have, who knows, maybe you have 30 grand down here. But I put 500 in, okay, in this green area. All right, fine. Then you put 1,500, awesome. Now you're gonna put 1,500 in, awesome, man. Well, you gotta do something with that 50 grand, or you gotta do something with that 30 grand, right? Yeah, you gotta do something with that 30 grand, or that 20 grand, whatever your allocation on your double or triple down is. 100, now you went to 500, all right, man, all right. Then you had 2,000, whoa, okay, you went 2,000 in this next level, good. Yeah, because why? Well, because your odds of hitting that trajectory, see like this rubber band, is increasingly likely. Okay, on this retracement, just popping on up. Now we hit, and you'll see kind of the effect of this. As we hit in and we broke through this little channel, okay, we broke through that channel, we wanted to get in live, another 10% was possible. If you jumped in late, just understand it's $100, okay? $100, next time I would just may frame that and put that on the deal. That's the investment level we're into, all right? And you see there's not a whole lot of room for it to go up based upon previous highs, et cetera, not a whole lot of room. It needs kind of a different flavor of a run. But, in and around this golden pocket, look at this. If we stretch back down to here, we've got some more potential, right? Yeah, and what? Well, we put 100 in up here. Yeah, probably, double, triple down. Get in that down to here. Oh, we get to double, triple down. Maybe someone wants to put 1,000, 1,500 in. Maybe 10,000, 15,000, maybe 150, maybe, you 100, 150,000, et cetera. You do the math, okay? But that's an approach. I'm telling you, the top investment firms, the hedge firms, the asset management firms on the planet. This is not just a Las Vegas mentality. This is not what we want to do. No, the top investment firms on the planet, double and triple down, period. Okay? So that is the investment approach. I hope you guys understand that. I need you to kind of understand, what is going on with that, and that we want your account to survive. Okay? I don't want anyone washed out. Okay, heavier investment levels on the way down. I don't want anyone washed out. I don't like seeing people lose money. The way that you're going to lose money, now there's volatility built into any stock. Read your investment books. Okay, you're going to see charts that literally go like this all day long, man, men and women. You're going to see these charts going up and down all the time. The way you lose money is investing too much around here, and then, well, it went down. Okay, well, what are you going to do with this big elastic band that you got down here while the price is down there, man? What are you gonna do? Well, we invested everything up here while your potential to go up was what? Well, it looked like it. Yeah, it did look like it was what? In need of maybe a correction, because everything is corrected. Okay, this has been a protracted retracement. Just understand, okay. In terms of the dynamics of this, as we approach this level again on this green level, what is that for us? That's an opportunity for us to up our investment, yes. And the quandary you guys get into is you're seeing everybody make 30 and 40% a day. I want you to take yourself mentally to a market. Take yourself to a grocery store. Take yourself to a solid goods market, okay? Imagine wheat being sold and rice and things like that and everything else. I want you to imagine you're out there looking for the best deal. And you've got commodities of rice, you've got commodities of grains, pork bellies, all these things are traded on futures, gold, silver, different stations all around there. And all of a sudden, someone starts ringing a bell, and they're letting you know that the price is going up. The price is going up at a specific station, okay? And it's not, it's a different maybe form of rice. You're shopping for rice, a different form of rice. Ooh, okay. Now they're ringing the bell. Ooh, now the price is going up over there. Okay, who in their right mind if you're there buying a commodity, okay, if you're buying, and I'm applying that kind of a generic investment instrument, yes, all these are different critters in terms of the management team and the technology they present in crypto. Who in their right mind is going to go run over to the rice station where all the prices are being jacked up and be like, oh yes, I want to do that? No one. They think, well, that's a different scenario because they're selling it and you're not. Well, hold on. The price is going up. Let's go run over there. When I think of Costco, I thought of walking through Costco the other day. You know, it's like I'm walking around here, and the mentality of the market right now is, of the crypto market, is they're going to advertise, well, 40% gain, right? A 40% gain on this stock or on this crypto today. The top winners are. All right. And I started walking through Costco, and I was like, what if they literally started just raising the prices on this table full of, and making a big deal out of a table full of jogging pants that they have, or control, thermal device, heat fans, or whatever they have in Costco, Cliff Bars, whatever. Would that generate any excitement? No. Everyone there would be like, oh no, they're raising the prices on Cliff Bars. I don't want any Cliff Bars. You guys know that, right? I mean, it would just be like, we're not buying that. That's absurd. That's ridiculous. Okay, but we're in the position. I understand the differences in dynamics, but I want to bring up that idea to you. We are marketed, and now we have to be smarter than the average bear, okay? Because the crypto and Binance, they're very good. All these exchanges are good at marketing this stuff. Look at the returns. Look at everything else. Well, the fact is, it's expensive, if not more so than just for a little while. You can look at the overall trend, even on this one, a consolidation. Even there's a retracement. So there's a corrective price function built into everything. Okay, if you've gone through the retracements on this, all right, that's cool. If you've gone through the retracements on this, all right, it's cool. There's kind of a cooling off period, you know? And it's at a kind of, there's a cooling off period. So even if you're in an upward trajectory, you can look at things, and maybe in an extremely bullish market, and I will say I have been more involved still at a regulated level, like at a more, in a bullish market. Like the chart on Bitcoin, guys, I got to say, chart on Bitcoin was strong enough. The chart on this is strong enough. It might have merited additional investment dollars rather than what's considered to be reasonable by maybe some people. But I always have in the bank, I have in the kitty, major cash in the back. All right, major cash to where I can cover these positions if things were to go south, and I can play this rubber band theory. That it's going to what it's going to do, and not necessarily in terms of the price action, but the effect of it is I'll have more volume at the lower prices on anything that I choose to continue to accumulate, and so that will essentially do that to my profits. With any movement in price on the upside, my profits are just going to go. Okay, my any losses I have. Okay, and the profits are just they're gonna swing through. That's just the investment approach. That's the mentality. It's okay to be confused on it, but just think of yourself in Costco, or think of yourself in a store. They're raising the price of men's suits, or they're raising the price of whatever you need. Oh, let's run over there and let's go get it. This is exciting. Now, I understand you're gonna hold on to it and it's gonna be worth more, but just think of some ideal like that. Understand everything has to retrace in value. Okay, everything in the market you're gonna see a retrace in value. We don't want to chase the tail here. Let's look at kind of an update here. I think that's enough generalized talk. You guys probably have better examples. That's just one I've thought of. I like to get deeper into this money, deeper into the discounts, and that's what drives action in the store. That's what drives action for me here. I want to see a deeper discount. That excites me. That means we've got some profit potential, right? Yeah, people, they love discounts. You love discounts in the store. Oh, that's a great price. I love that. We have to apply that here. We have to apply these different levels of investment. Light at the top, light at the top. All right, now I'm still not totally convinced that this thing's done, because it is kind of still walking up this little deal. It may not be done. It may rally later on today. It could do that. It's already been through a 30 to 50% rise. If it continues to be extraordinary, it may do that, guys. If it does that, that'll be great. What do we know? Well, we have, a lot of you have already taken your profits. That's okay. You made your 30%. That's fine. If you have another period of time to wait or another thing to focus on, that'll be good. You know, that'll be real good. Are you guys focused on, I'm going to bring this up, are you guys focused at all on this? And I don't want to bring up anything other than the channel, but as I pull this cursor over here to the right, are you focused at all on this? I don't know. I know some of you are focused on some of these to the right. Looks like everything's turned green, essentially, okay? So that's good. In line with, one is technically green. Everything is green right now, so that's good. Looks like everything's having a decent day. Everything seems to be correlated, right? Yeah. So let's jump into the comments, you guys. Do you have a top 3 picks? One XRP. Interesting. Top 3 picks. I'm gonna have to say I don't mind any of those that you're talking about. I haven't charted those out because, and I'm saying charted them out like this because I don't want people to be managing multiple bags at the same time. I like in the dynamic right now. I like the position of Ethereum. I like the position of it. I like the dynamic of XRP. I like the stability factor and the returns of Harmony One. Okay, and I do like, as we get into it, I love BNB, Binance Coin. I love Binance Coin. Very strong story. Very strong market potential, guys. I love Binance Coin. I love the story behind Theta in the video element to Theta and the real use, effectuated use of Theta. I do like the price action on Fetch. I like the 62-cent mark. I like Fetch where it's at, and possibly going forward, it has a good story, and the management team can speak to commodities, trading platforms, AI involved. I like that. Bitcoin is the big dog. I like the security it provides, and it feels good to ride up with Bitcoin. I'll tell you guys, if you haven't ridden up at a big level with Bitcoin, it just feels good. It's a nice ride up, and when you catch it on the right, it's nice. I love altcoins. I like the hedge factor that they present to us all. And I like finding the most dynamic altcoins that we can. Within that, Ripple is one to watch, okay, because of what it demonstrated in the 2018, okay, because of what it demonstrated in 2018. So we get into Hive, get into, I didn't know we're talking about all those. Faster, cheaper. You know, you're going to find all of this in the next new coins, the next big deal. Anything that's going to draw your attention away from, I can't tell you guys which levels to invest in. I can't tell you guys that. That would be financial advice. So I can't literally tell you that, well, you have to do this. This is what you need to do. This is what we're going to do with your money. No, I can't do that. I'm not going to do that. If you're choosing to pull out bigger guns at these investment levels, that's your device. That's your own advice that you're taking. If you're not following, what I do is in terms of a strategy, and what the top guys do, that's probably repeated through some major institutions around the world, then that's your decision, and you can take from the channel what you want, and everybody chooses to do things differently. It's that's just what makes the world go round. So that's nice. Yeah, I like Harmony One is nice. It's nice to go through these upshots and see what these price actions, positive price action. I like the story. I think it's allied very well with BNB, Binance. Yeah, that's a $400 coin. All right, $2,000, easy. $2,000 on Binance, easy. All right, it's at 400, $2,000 on Binance, easily. You start looking at, I could see Harmony One. I like Fetch because of the dynamic of a 62-cent. Harmony One needs to get there. We can trade Harmony One and make cash, or we can watch it go accrue in value. They understand that the staking element of Harmony One is requires a consistent price action. So that's good. You guys look at XRP. You know the story there. It's a sub-dollar right now, and it's confluent with BTC. You guys know the story. You watch the video. XRP, when it gets going, it could be dangerous. So it's a great hedge against the market overall. I'd like to just see consistency in the market, and I'd like to see your accounts continue to last, and that we see this price action with Harmony One last, and that on the meantime we become a master at Harmony One. We master the elements that are involved in Harmony One so that we can trade the highest gain potential of any altcoin right now that we see 20 times, with probably the best story fundamentally that we've been able to find or achieve. I just believe that. And I think if you guys didn't believe that, or you didn't know that, that's why we're involved in it, guys. It's not just for the return, it's also for the story, it's also for the fundamentals. And that's not easy to find. It's something that you can believe in on both sides and watch it perform. So that's a good thing. I like the management company. It's a strong group. Harvard Business School, Google Play, Google Maps, all the fundamentals to where we can tell the story and have a reasonable investment advice that we can apply or lay over from some of the top firms and say, yeah, that makes sense here, man. Yeah, that makes a lot of sense here. We reasonably look at our investment approach, and we kind of siphon off what we can from our own education and from each other, and we understand that Harmony One is the reason that we're together. It's the reason that we have a community. It's a nice community. It's a big community, and it's growing. And we appreciate the management structure. We appreciate a lot of things that are going on, and there's a lot of work that goes on around these investments. And it's nice to be in a community around people that want to make money. So you're welcome, Kent. Copy that, brother. Copy that. And so let's see what we have with any other questions in the comments section. Let's go through, and do understand, guys, everybody has a niche. Everyone has a real estate development. Let's see what real estate development, one of the most profitable communities in Canada. Oh wow, you're looking for a real estate connection. Okay, well, wow, huh? That's interesting. Good question. Do I have any real estate contacts? Well, when I got out of Duke University, I built a $1 billion equity fund that was comprised of kind of a diversified $1 billion stake in different real estate developments. So that was my 22-year-old job that I hung my hat on, was being the lead investment strategist analyst for a $1 billion equity fund. Got cash from Harvard, everything else on that deal. Worked at the Harvard Investment Endowment when I was 22 years old. So I got into this financial game early on, guys. So it's just funny you say, do I have any contacts for real estate investment? I'm steering away personally from hard assets currently. I'm going into, and I don't think it's a bad play necessarily. I love real estate. It's where I started out, but I'm more into trading right now and long-term potential in trading. But yeah, I appreciate you asking. That's good. What are you guys, any other questions on Harmony One or your trading strategies? Do you have any other questions that you don't understand? I'll just say the baseline approach that it's been repeated on, not in this depth, not with a chart, not with, the technology and the program and applying things over to the instant discussion. Let's look at one thing real quickly. Let's look at this. This does on the moving average, huh? This does get our attention. Okay, everyone pay attention on Harmony One. And I've seen this discussed, I think, at the wrong levels, which is okay. I do see a percentage dip here in below the 20-day moving average. And what we're going to do is add some teeth onto this. Now we see two W formations here. What I want to do is, this is the last time that we dipped below the 20. Okay, and we have, let's see. I'm going to say ballpark. All right, you guys, pay attention. Pay attention. All right, we have, in and around 22nd of February 2021 on Harmony One protocol, we have a divergence, or we have a dropping below the 20-day moving average in the form of the price action, which essentially dropped down, I want to say 25 with the scalpel out, I want to say probably fine-tune, refine right here, 24.18 to 25.18% of a pullback below. So we have a 25% pullback below the 25 or the 20-day moving average. Then we have what appears to be roughly about a 12%. So 25% is a figure to look at in terms of what has been correctable before this period of time. Okay. Now we have not been, I don't believe we were in, now you have to say, guys, we have to look at this. All right, let's do it. Let's do it. Everyone's like, you know, we should just, wouldn't that be cool if on the channel we had that, was it tone loop? Let's do it. That'd be pretty cool. I should put a button on here. Let's do it. But let's get into the fib retracement. Let's do it. The Funky Cole Medina. That's an old song. Dating myself. All right. Let's check it out. Now, we have a retracement that we have applied, which if we extrapolate and push up, I wanted to bring up this, I may want to dip this down. This gets into, when did this trend start? We know we've already breached that. All right. The last time that this happened, when the 20-day moving average was put through the hilt, okay? You guys pay attention. The last time that this did happen. Now, history repeats itself in the form of the sun coming up every day. Doesn't mean it's going to repeat itself in this chart. We have double down, triple down approach, which covers us in terms of losses on Harmony 1, and we like to play that into our profits. The last time this approach worked on the fib retracement, we broke down through the 20-day moving average. We got into the golden pocket. We got into, I'm bringing that up, we got into the golden pocket. All right. Now, if this is redefined up here, yeah, we're still in there. I'm going to go ahead and say that that's it, or that's it. It's kind of outside. If we pull it all the way down here, this is where it gets tough, guys, because you can't necessarily say, well, this is not, you know, what's the trend? See, I'm going to say on the left-hand side, look at the dotted line. Okay, now that squashes the previous dotted line. That essentially makes things. This is where I need to literally just blow this thing up. We're really, really close. See, that's on the edge. I'm pulling up from there. I'm going right there with the fib. Okay. Now that's just let's look at this. We broke through the 20-day moving average. What did we hit? We hit this 61. Now it's close. Okay, it is close in terms of what is hit and why. Look at the fib level retracement here in and around this period of January 30th, okay, of 2021. Watch this. We had the price action movement to the upside. We broke through the 20-day moving average. We retraced down through, okay, we retraced hard down through, okay. We got a 61% retrace. Guys, lost 61%, bam, gone, right? 61%. Now, what do we? That puts us. That is the golden pocket. Okay, that is the 61% to the 65% retracement. That's the golden pocket. Then what happened? That's what I'm talking about. The golden pocket is a healthy thing, guys. It's a healthy thing. All right. So, and people want to say, well, I don't want to miss it. No, you don't want to miss it. Huh? But what happens when you get into? Because that's why people say, well, I'm going to leverage more cash in right now, et cetera, et cetera. I have to put all my money in now. The equivalent here that we're looking at is that we're not there yet, all right? We're not quite there yet. Being there is right where this, and I drew this out. It's interesting. I drew this out before we looked at that, all right? The last time we kind of ruptured this moving average, all right, was the first major peak in the storm of Harmony 1, right? Yes. Now, we haven't gotten to that thumbs up yet, all right? Will we get there? It'd be nice to see it. You know, it's a healthy move for the price. It's a healthy move for Harmony 1. It's built into the calculative events and the price action of what's needed at some point. These probabilities, these what are they? Ratios, essentially pullback ratios. They're necessary for the health. Okay, the long term, you want it to go to $1, $2, etc. They're necessary for the price action Last time we dipped into this golden pocket right here to the right. It's that same level, but this price action dipped down into here. Now this time we have dipped down to here and we got a good trajectory. Let's see if that's repeatable into that. It's the 50% kind of watermark on there. It's that teal zone, right? Let's see if we had any price action there at all. Doesn't appear that we did. Can we redraw this? This is where you get into redrawing. I'm not a big fan of redrawing. I do not do this. See, you'd have to get into here being, I guess you could. Yeah. It depends on where you want to draw your deal. I would just say that, if you want to deal with the slope, if you want to get into a slope derivation argument, then yeah, you're still at your golden pocket, all right? You're going to be at your golden pocket. You're going to be at your golden pocket. However you look at it, you got into your golden pocket. There was not a trajectory up at the teal level, which is what we saw. It became the support last time. So we have gone we have shown more strength at this level. Understand that, and that may be collectively because of the channel that we have. We have shown more strength in Harmony 1 in terms of the pullback. This pullback, which is of credit to the community, we have shown more strength as of right now at a higher level. So that is exciting. It does not dismiss the fact that you guys understand more capital in reserve, able to put into something like Harmony 1 at a lower level is positive, okay? And now you're not going to miss the whole trajectory up. Look how many opportunities you had to jump in on the train, jumping on, jumping on. Okay, you get into, okay, the train is leaving. The important thing is to have your eyes on it, okay? To have your eyes on what's going on in the price action. We have met that qualification, that necessity. So, yeah, that's beautiful. As we look in, yeah, we're going to be able to jump on the train. If you guys are worried about jumping on the train, what's important is you have the price action, necessary investment funds at the specified levels to enjoy and maximize that price action. There's a lot going on. You have to be able to maximize that price action for yourself. Okay, you've already done that with here, and you've shown more strength than we showed back in the original. So the group of investors now is stronger than what was around. I'm going to say that, than what was around. Technically, this is a stronger club, I would say. But the golden pocket did get you up here. This does prove that the technicals were around then. And you want to know, why is this a key level? Why are you bringing up the golden pocket? Now, I hadn't looked at that. Just kind of saw, hold on. Yeah, and now we see, yep, everybody agrees, that golden pocket here, bam, bam. That's that upward trajectory that you guys need, that you guys are looking for. So that's the phenomenal day race. That's the Indy 500 at 220 miles an hour. Okay, that's what we want to get into. All right, it's just that's cruising around that track at top speed, floorboard. Literally pedal to the metal of acceleration that we want. If we can get into that, it's phenomenal. If it needs to play around a little bit and kind of discover a new area with the other alts, that's good. I would anticipate there's going to be money available to flow into Harmony 1. I think you guys know that, but it doesn't go without saying. And you guys have performed technically better, I would say, stronger than what was around Harmony 1 in the very beginning. I think that shows a development, and aligned with these price patterns, it shows a development, a technical development, along with a very technically based chart. So yeah, you guys are doing a phenomenal job, very good job. Any other things that you would like to, let's see. Yeah, I like that, just have faith. Crypto for life. Hey, I like that name, Crypto for life. Very nice. Change that to a K if you want to. I like crypto with a K, I don't know why. Let's see what we got here. 61 in Feb does not mean it will not now. Anything else in the charts? I'll let you guys go. We've covered some important points. We just covered the application of the golden pocket. Again, heavier investments on the way down as we meet these price levels. Heavier investments. It's proven. Now you look at, everyone's wanting to know, is this financial advice? Is this even true? Well, yeah, now we've applied it to the original price action. It's like, yeah, it's true. These price levels are key, it's just the truth. So You can't argue with the truth. So hit me up in the comments real quickly on anything else you guys would like to see, anything you need to see. If you have questions about your education, if you have a question about Oxford, a question about Get Smarter or John J. Murphy or trading or just generalized questions, particularly about Harmony One. What else can I answer that we haven't covered? Because I think this is a very good, kind of lengthy but important, deal for us to kind of go through. Smash up the like buttons if you guys can. We got about 50 likes so far. It's okay. I'm good for a small crowd. Probably means we'll have an overall group of about 500 that have been through in and around. So that's good. It's interesting, about 10%, so you guys know about 10% people will go ahead and click like. So that's interesting. Let's see. Go ahead and hit it up in the comments. Any other questions on Harmony One? Any other questions on Harmony One? Let's see. And let me check in on prices if we have any kind of movement. And let's see, price action on Harmony One, we're at 15.9. 15.9. Our entry point yesterday was 13. So you're in the money for sure. If you followed that, a lot of you got in at much lower, but individuals who were in our different discussions and videos, etc., you still have a sizable, going up to 34%, is actually maxed out at over 50% yesterday. You're still in the money at 24.7%, guys. Beautiful. If you guys hit that target, you're up 27%. Beautiful, huh? That's awesome, guys. Good job. That's nice to see. You're doing a great job, and just congratulations on that. And I'm not seeing any questions in the comments, so I will assume you guys are good to go. I'm going to cut a different tape that we can just get out to everybody so they don't have to watch the stream and listen to us chit chat and converse. Listen, everybody, right now, go over to the Discord. Go to the Discord and start communicating there in Discord. We can do maybe some telephone chats, maybe some different things. But I like the style of the channel. We need to push the channel and the community. I want you guys to be active in Twitter, be active in your social medias, and pushing different angles for people to get into and to understand. It's crucial, guys. It's part of gauging the sentiment. That's a big Metcalfe's rule in terms of social sentiment and the value that it drives to a product. That's a real phenomenon. So make sure you're involved and you're gauging that. It's part of you staying on top of your investment, and I encourage you to do that. I'm not seeing can it hit $1 this year. Anything can happen. Anything. There you go. 30 cents possible by the end of the month. You got it. Sushi Swap. Big news on Sushi Swap. It's so cool, huh? I like the platform a lot. Harmony, Sushi Swap is on Harmony now. Harmony's got great potential. You guys know that. That's why we're here. So, very exciting. And yeah, it'll get picked up by some other great exchanges, etc. All right, guys, I'm going to, since there's no more questions on Harmony One, we'll get back if and when there's more details. I'll cut some regular videotapes so that people can enjoy just a good 10-minute, 20-minute kind of discussion on Harmony One and kind of go through some analytics. And you guys all go over to, and I want you to confirm right now in the comment section, confirm if you have joined the Discord. We have 34 people here. Confirm that you have joined the Discord. We have a good group here, and there's no reason the comments can't continue throughout the day. Everyone go into the section, the comments right now, and confirm that you have gone into the Discord, or that you're going to go to the Discord. Okay, I want you to pull up and at least join. Hit the go ahead and make the friend, etc. Whatever you do there. I'm not sure what that is. Let's see. Go ahead and tell me about that Discord, and that you're going to do that. That would be very important. So go ahead and do that. And there you go. Appreciate that. Shout out, Daniel. Appreciate that. Real good job. And I've got my, it sounds like my little yupper puppies are about to start going. Let's see. I'm trying to accept the link is not working. Can you share the link? It's the pinned comment. Did you not get the pinned comment? Is that not working, Kent? Let me know if that if that is working. The pinned comment, is that not working? Because I know it's worked for some people. And let me actually test the link here. Let me test the link. I'm going to open that with Chrome. Let's see. With Discord. Oh no, it works. You got to pull it up in Discord. You got to download Discord, and then you get Market Handler has invited you to join Crypto Kingdom. All right, so you may have to download Discord from the Google Play or from your Apple iTunes Store. And yeah, it looks like good things are in store. I appreciate you guys understanding the different levels of yeah, I appreciate that, Zero Gajin. And yeah, I appreciate you guys understanding the different levels of investment. I don't want you to be overexposed. People say protect yourself at all times, boxing, etc. This is very much the case. Always protect yourself at all times. If we're in the corner, protect yourself at all times. Expect those retracements, and we need to capitalize on those. Now, the price here, you know, we'll see what it does. We're lightly involved right now, very lightly involved right now. Until we establish another uptrend, I don't want to see, you know, in my own portfolio that change at all, that level of involvement. That's just the truth. Okay, and so I will let you guys go. We'll cut another videotape, and we'll be back later. We'll try and see if we can get some positive action on things. And yeah, you guys be good to each other and be good to your portfolios. Measure your risk and make sure you're around for a long time. We like the group and want to make sure you guys have a good longevity to you, and that Harmony One continues to outperform the rest of the market. It's been a pleasure to bring you this information and for educational purposes, to start going through some of the logistics and where these ideas come from. They're not just originated with me, etc. So keep supporting the channel, keep supporting each other, maintain a lot of awareness and watchfulness. And I appreciate you guys who are also following us on Twitter. We are The Kingdom, TheKingdom, The Kingdom. It's at The Kingdom. So you can follow us on Twitter. Go ahead and give us a follow there. And we'll continue to do good things. If good things are happening, we may stream again tonight. And yeah, we had a good showing last night, probably 150. I think most people are at work right now. But we had about 150 people live. You are the privileged few who are able to just relax and enjoy during the morning hours a nice Harmony stream. So that's really great. And yeah, I'm glad that you learned about the Fibonacci, and I'll continue to teach you guys. There's a lot where the Fibonacci ends, and we have to pick up. So I appreciate you guys being tuned in. And notice this little guy right here. See this little guy? This little thumb on the way up. Now, this level is going to get hit again. I'll tell you, this teal is going to get hit again. And it turns, if it does, let me say that, if the price action regresses, first of all, this would be our level of resistance. We'd see another level of resistance, probably at a double down, triple down. Then we have another level of resistance at the double or triple down level. Okay, beyond the teal, heavier cash. Okay, that's when the elastic band gets from here to heavier cash. Whoosh. Okay, you really wanna try this thing. Yeah, the heavier cash will get to shoosh. The heavier cash on an aggregate basis and widespread interest. Okay, so that's what we're looking at in terms of the profit maximization, etc. So you guys I appreciate that, Why Woo, and yeah, you guys have a good day. We'll get back to you soon. And yeah, just protect your portfolio, be good to each other, and be good to yourself. Take care of your relationships, whatever you have going on outside of the market. They may not understand what you're going through, so or what you're involved in. Make sure you take care of those relationships, take care of your health, eat well, sleep well, and yeah.